Hey there, Dave here along with Chris and Jordan. Welcome to our special Peloton live earnings reaction video. Their earnings are going to be released in about a half hour from now. Here's what we know. Peloton is a trendy brand. It's created what might be the first ever luxury home fitness product. They have an outspoken group of users, and they've achieved a level of demand that's rarely seen in a premium-priced hardware product. It's the Apple of stationary bikes. And with a paid subscription service that differentiates their expensive bikes and treadmills, they're really more of a tech and content company. But their website has been back-ordered, delayed delivery mode until, I think it's been that way for forever. But right now they're saying that deliveries are 5 to 9 weeks or more, depending on where you live. But it is a company that is ideally positioned for an event that keeps everybody at home. You're not able to visit these non-essential businesses like gyms, so it should be a beneficiary of our stay-at-home economy. And we're going to find out how they did in the next 30 minutes. Chris and Jordan, they've made big bets that hinge on today's earnings report. Chris and I don't agree on how their earnings are going to turn out. Expectations are very high. The stock has run up because they're an obvious stay-at-home pandemic company. And I'm sure that they're going to have sold as many bikes as they possibly could, but I don't think that this is a well-run company. We've seen the failure of their operations in the past. You remember that $300 million lawsuit where somehow they didn't realize that they actually needed to pay for the music that they're using in their workout videos? Not only that, they also had to shut down their popular live classes during the pandemic because one of their employees in the New York studio tested positive. They have since started doing the live shows again, but they've shut down both the New York and London offices, but they're back on again live now. So, Chris, I think you've forgotten your methodology that says when you buy a stock and you think you have an information edge, you immediately sell it once that edge has become known by investors. And the headline 5 weeks ago was, "New data shows Peloton is clearly benefiting from global quarantines." So there's that. And with their website on sold out, long back order, delay status, they really could have, do you think they could have sold more bikes than expected? Did the company that is so poorly managed in the past somehow fail to did they get their act together and magically streamline their production and delivery operations in the midst of the most challenging supply chain ever? I'm not betting on it, but let's hear what you're hearing out there, Chris.
How big of a devil's advocate role you play. And this has been benefiting us since we were 13 years old. Like, I love it because you make me work harder and you make me doubt myself. And that is the most important thing that you have to have as an investor. You have to look at the other side of the story. You know, I have been doing nothing, almost nothing for the last week other than Peloton research.
I know. You've been researching this nonstop for at least a week, right?
I've been researching Peloton for months, but the last week.
Do you have some data or insight or something that's going to convince me to change my mind and buy some stock? I have, I think, 25 minutes to get in if you think you
okay. I'm going to go fast then for you, Dave. Okay, first of all, Dave, let's just talk about what you just said. Bad management. I agree. Management has done some suspect things. But, okay, has Tesla and Elon not done plenty of suspect things in the past? How about Lululemon? How can a company like that manufacture yoga pants and put them out there in retail stores that you can literally see through? That was a disaster, right? But we're literally the best retail fashion company in the world right now, right? Tesla, the greatest automotive company maybe of all time, right? There's
so you're right. They've found an audience. They have this niche of people willing to pay 3 times as much as the competing products. They've sued the competing products for being too similar. Do you really think that they're going to blow it out this quarter?
Yes, I do. So I have, most of my research has been looking at the short side, looking at the counter arguments, and trying to poke holes in the long thesis. And I just have a list of things I want to go through with y'all, and I'm going to try to get them done the next 15 minutes. Okay. So if Dave, I can convince you, maybe you'll throw a little bit in on this trade by the time I'm done. Okay.
Clock's ticking.
Where do we even start? I mean, God, I was trying so hard to find a short story that made sense on Peloton. I literally just can't find one. This is a generational opportunity, I think. Let's start with the most important driver of this quarter and next quarter, because next quarter is actually more important than this quarter. That's where we're going to see most of the sales come in, most of the revenue come in from this kind of pandemic that we're in right now. But I think the biggest thing here is the biggest knock against Peloton has been marketing. They have to spend so much money on marketing to acquire new customers that it makes the company seem like, can they ever be profitable? Well, the reality is they have margins on those bikes that are roughly around 50% margins, incredible margins on these $2,400 bikes, right? And then they have a SaaS product at $40 a month that the margins are through the roof, right? I think they're like approaching 70% on the SaaS product. Now wait.
But you realize you could just go out and buy a bike for half the price or even less, and then subscribe to their 13. If you don't have the bike, you can get on their SaaS product for $13 instead of $40. They have a discount for people who don't own the bike.
That's the beauty, Dave. They want you to do that, right? Peloton wants you to do that. They are more than happy to have you go out and buy a $500 bike and pay the $13.99 a month for their service. Because guess what? That $13 a month, that only includes one account. If you want your girlfriend's account or your wife wants to work out on that same bike, you have to then have two of them. All of a sudden, they're getting $26 a month. You're on an inferior bike. And then you're thinking, wow, I really want to be part of the social aspect of this Peloton program. I would love to get on that leaderboard. I'd love to have those extra things that all my friends and all my coworkers are doing that I can't do because I don't have that additional access. And that's when you think, you know what? We love this experience so much. Let's go ahead and get a Peloton bike this holiday season or for my birthday, and we'll increase from the $26 a month we're paying to $40 a month. It's only a few extra dollars a month, and we get the full experience. Peloton has already shown that people are upgrading. They actually view that cheaper product as being a sales funnel, because here's how it works at Peloton. Ready for this? That $13 a month product is designed to be a break even product, meaning that they are spending about the same amount of money to acquire those customers than they're making of those customers over time. Now, a certain portion of those customers will ultimately convert to become full-scale Peloton hardware customers with the upgraded subscription package, right? And then when they acquire those customers, it's essentially a zero cost of acquisition. They're acquiring customers for zero because they've already acquired them at a flat customer acquisition price of the $13, right? So it's a beautiful, beautiful model, Dave. And more than anything else, what we have to ask ourselves, whether you believe in Peloton as a long-term company or not, let's forget about that. How about this year? This quarter, next quarter, and then the rest of the year right now is all that actually matters as this trade, right?
I'm with you on that. And I'm not thinking that this, even if I were to play this earnings, I'm not thinking this is a company I'm going to want to be in long-term. But even so, I just don't know that this quarter is going to move the needle enough because everybody's expecting it. We've seen the stock chart. It has gone like up nonstop.
Okay, Dave, fine, but that was part, listen, that was part of it, right? That was part, Jordan, go ahead. I mean, that was part of it. But Dave, what I'm telling you, listen, I went ahead and I did up some of my options. I had $30 calls. I have $1 million in Peloton stock. I'm up about $300K in the past week on that. I had about $180,000 of Peloton calls at the $30 strike. I made about, $300,000 in those. So I'm up $600K in Peloton. I took those calls, I sold them today. I upped those calls, I kind of moved them up the chain. Now I have $35 strike price calls. So I have 600 of the $35 strike price calls in addition to my 25,000 shares of Peloton. Now I agree, expectations are really high, but you have to ask yourself, what is happening this quarter? And the biggest thing that's happening, I think, this quarter and next quarter, and maybe for the remainder of the year, is I think, this is a thesis, okay? It could be proven wrong today. Lower marketing expenses. And that is the thing that I think, even with all the expectations that I've seen, that's the one thing that I don't think the market is fully appreciating going into this quarter.
That is one thing that I have not been able to find many articles talking about. You see a lot of people talking about how their demand is high and how their order numbers are high and how competing products' order numbers are high. But you haven't really seen people focus on the marketing cost and the cost of acquiring that new customer. But if the cost of acquiring the customer were zero and they still are only selling as many as they could possibly sell, which is the same number that they would have been able to sell without a pandemic, it's not like they increased their production capacity, or did they?
Yes. So they own their own manufacturer, right?
And so this company that is so good at managing themselves, they were able to, in the midst of this pandemic, where supply chains are difficult to deal with, where delivery systems are difficult, they were able to break through and somehow do something that they would otherwise need to rely on a third party like Amazon.
No, listen, Dave, it appears that they had enough inventory on hand for the entire quarter. Okay. So it looks like they could flush through that entire inventory and then up their orders for next quarter. Okay. So I don't have any,
do we know what the delay was at the end of April? So the quarter ended, I'm guessing, at the end of April. Do we know, like right now, we know that their delay is saying 5 to 9 weeks.
5 to 9 weeks. So listen, you're right. There is a risk here going into this trade, that there is supply chain risk. In fact, I've seen some data. I actually subscribe to, remember that old Amazon, you can check all the products on Amazon, right? They actually have they have a supply chain tool that you could actually I could pull it up the supplier for Peloton, and according to that tool, that's roughly half or more than half of Peloton's bikes. They have not made a delivery, according to that tool, in February, March, or April. So that was a little bit of a red flag for me. So I called up Peloton. I've been speaking to the reps. I had to wait like half an hour at a time to speak to the reps. And the first thing I asked them is, okay, guys, are you guys out of stock? Are you on back order? Like what? And they're like, no, we got plenty of bikes. We're delivering bikes every day, all day. We have bikes in our facility. There's nothing on back. You know what's on back order? They told me that large shoe sizes are on back order and weights are on back order. And they said both of those things are coming in on May 13th. They said
why is it
bikes
taking
are not
9
on
weeks
back
to
order.
ship something that's in a warehouse? Why is it taking 9 weeks to ship something that exists in a warehouse? Is it that it has to come over from China or wherever they're being made, or they don't have a good relationship with a trucking company, or they're trying to manage their own deliveries? Because I read that the people who had a third party deliver it had a bad experience, and the people who had them deliver directly had a good experience.
Dave, that's true, but that's nothing new. That's been going on with Peloton and XTO, their third party delivery service, for 2-3 years now. So that's nothing new. Listen, if you look at the data, the qualitative data, the anecdotal data, I have read, and I know this sounds crazy, and you're probably not going to believe me, but I have actually read over the past week every single mention of the word Peloton on any social media channel, whether it's Twitter, Reddit, Facebook, Instagram.
You know article. I don't believe you. I know that you read a lot, but you couldn't have read every mention of the word Peloton that exists on the internet.
Every mention
you have lost your freaking mind.
Every mention that I was able to identify across any social media channel in the world, and I would do this morning, day, and night, and then literally I got to a point where I hit the end, and I'd have to wait for 6 hours for all those channels to refresh, so I could then spend another 3 hours and read every single mention again. And here's what I saw.
If for the people at home, if you appreciate Chris's effort, give us a thumbs up, smash the like button, because that really deserves it. It'll also help the algorithm, help people find us here. Continue.
Listen, that's what I do. That's what I've always done. That's what I've been doing for two and a half decades. I look in areas that others don't. I do the work that other hedge funds are not willing to do, right? We all have access to the same data sources. We all have similar web data. We have G-Trend data. We have credit card data. We have all kinds of data. The top funds in the world get the same data that I get, right? I pay for that data too. But I am looking for data they don't have. And I know for a fact, because I know these guys very well, they refuse to do what I do when it comes to reading every social mention anywhere through any channel. And here's what I found out. What I found out, and I should have shared these. I have photo captioned a few of them actually. What I found out
you can share from your laptop, by the way.
Yeah, I'm sorry. What?
You can share from your laptop. I have access to your laptop.
Oh, okay. I might do that. Okay, so here's what I found out. Many people are sharing the fact that the number of friends in their Peloton network has gone up exponentially over the past 6 to 8 weeks. Meaning that I know there's one person that wrote on Twitter, just anecdotal example, who said that he had, I think, 13 friends in his network when he bought his Peloton 6 weeks ago. And now he has 52, which is insane. It's like, now that he's in New York, so New York, who knows, and he's a pretty well-known guy, but he over triple in just 6 weeks. I'm seeing that over and over and over again. You know what? My parents bought a Peloton 2 days ago. My sister bought one, and it's not just me. This is not.
So they're gonna get these in like June or July. Is that what they're expecting?
My sister already got hers. My mom's getting hers in New York on July 7th or 8th, I think, is when she's getting hers. Every piece of data I'm seeing is that everything is demand driven. It's all demand driven. I want to talk about the year real quick, because a lot of people are going to talk about pull forward, like Netflix. Oh, well, it's pull forward from the rest of the year. Let me talk to you about the rest of the year. Here's what's happening. So first of all, this next quarter that we're about to get into, everything's sold. They're sold out for the whole quarter. The whole quarter is sold, whatever they can deliver. So if you believe that they don't have a supply chain issue, if you believe that, then the numbers for this next quarter will be through the roof. Now, how about the rest of the year? I personally believe that even if everyone gets back to life with this pandemic, that there's a certain percentage of these people, call it 20, 30, 40%, including myself, that are not going back to life. Or even if we are, it's very little, okay? And even if we are going back to life, we're going to start planning for the fall and for the winter. And I think Peloton sales are going to continue to be robust, not just this quarter, this next quarter is called Q3 in their world, but their Q4, and then the following Q1, which is actually the holiday quarter. In addition to that, I think they're going to sell every single machine they could produce. In addition to that, I think their marketing costs, and this is a thesis that hasn't been proven, are going to be dramatically reduced for 2020. That will actually, for the first time ever, I don't know if they're going to be profitable, but will get them much closer to being profitable than anyone is anticipating. In addition to that, I also have identified 3 new products that they're coming out with, and I believe, based on what I'm hearing, that 2 of those products are likely to be released this year. One of them is a smart bike, meaning it's going to be a Peloton bike. It's digital and electronic that actually controls the incline of the bike as well as the resistance of the bike automatically based on the terrain you're going through or what your instructor is doing. So rather than your instructor saying, turn this up to level 8, it's just going to do it automatically. I think that's going to be a huge deal for Peloton. They are also coming out with a rowing machine, game changer, because Peloton right now is all about your lower body, and the rowing machine is going to complement that with upper body. Game changer for Peloton. Also, they're going to come out with a lighter, less expensive
The competitor already has a rowing machine, by the way.
What?
Continue. Their competitor already has a rowing machine.
I know they do, and they're doing great with it, but I don't care because they're not Peloton. Anyway, they could do well, and Peloton could do well. One more thing. The tread is not being delivered right now. We all know that because you can't deliver the tread. You know what that means? Do you know what that means, guys? If I'm correct with this thesis, and they are operating at 100% capacity, and I've already heard from one of the reps that I spoke to that they hired new teams in Texas, new delivery teams to handle the excess demand. Even with those new delivery teams and all that excess demand, they still can't handle the excess demand that's coming in Texas. Now, so what I'm going to tell you is the tread that they cannot deliver right now. They are what's happening with people that wanted the tread last month and this month and next month and the month after that. They are just
ordered one
getting
from a competitor.
Put on no. They're not going to. Some of them will, but a lot of them are just going to put on the wait list. And whenever that tread is ready in Q3 or Q4, whatever it happens to be in Q4 or Q1, which is the holiday season, then they're going to have all these orders waiting for them on the tread. So even if the bike sales kind of dip a little bit, it's going to help fill with the new equipment coming out, with the scare of the fall, and then the holiday season. I think Peloton sells everything that they could physically deliver from now to the end of the year with reduced marketing costs. That's the thesis. That's why I made this monster trade. And listen, I'll be first to admit, I can get slaughtered after hours if I'm not seeing this correctly on the supply side. If there's a supply chain issue that I missed, that's what will slaughter me. Also, if they talk about pull forward, that could hurt the stock, or just profit taking because it's gone up so much. That's also a risk. So there are real risks here. Sorry, Jordan, I haven't let you talk, but you're Peloton. You're the only one that
actually want to just address. Yeah, I just want to address. In the comments, I've been kind of watching people talk, and there's a handful of people that are saying that, there's so many people going unemployed. Are they going to rush out and buy a bike right now? I think that's missing the point that 80% of the country is still employed. They still get the same paycheck, but their costs are going way down because they can't do anything. And so they've effectively gotten a raise. And so they could have an extra $1,000 or $2,000 lying around. They're like, you know what? Free Peloton, basically, based, from what our budget used to be. So I'm just going to go out and buy it when I wouldn't have normally bought it before.
Jordan, in addition to that, I think people are not understanding the low penetration levels of Peloton. Yeah. Peloton they have less than 1 million people on Pelotons out of 300 million. They have less than 1 million. So we're not at this is not Apple, guys. We're not at a state where everyone already has one, and they're trying to squeeze out the last 5 or 10%. It doesn't matter if 40% of the country is unemployed. If you even have 10% doing really well, Peloton can flourish for the next 2 years just with them, okay? So
even though nobody is expecting profitability for this company until the mid 2020s, like mid 2020, I think 23 was when they were originally projecting it.
Dave, go ahead.
I was just going to say that their gross margins are falling from 44% in 2018 to 42% in 2019. We haven't yet seen anything in 2020. We do know that as their business increases, their costs are going up from 54% in 2018 to 64% in 2019. It's not a sustainable business. They're not running the business the way a business. They're running it the way a startup would.
Yeah, that's wrong. Yeah. What I think is that you might have had a situation where their costs were going up because when they were going public, they were blowing it out on ads. They were blowing it out, trying to get their name out in front of everybody. But this situation, they don't need ads. Everybody's just going
Jordan, but the margin, let me explain the margin. See, this is the thing. A lot of people see top line data, but you have to take the time to understand what's behind it. So here's why, Dave, their margin dipped. Okay. It was exclusively because of the tread. When they released the tread, okay, the tread has a much lower margin. And when the tread came in, the tread sales that are lower margin sales, when they all rushed in last year with all those new sales of the tread, that is the only reason why their margin went down. In every other area, this company's gross margins are going up. And let me tell you something about margin. This company is actually set up to be extraordinarily profitable. It's insanely profitable. The only reason they're not profitable is because they are literally taking every dollar plus 2x more than that and spending it on insane amounts of marketing. They are spending hundreds of millions of dollars on marketing. If you remove that marketing budget, now, I know what you're going to say, because if you remove the marketing budget, you can't grow. But if they want to stop today, if they want to stop growing today, Peloton would be one of the most profitable companies out there. Their margins are 50%. Their margins are 70% on their SaaS product. It is insane. This is literally structured as a technology SaaS product with the most profitable hardware business you've ever seen.
I made that argument for you to begin with. They are a tech company, they are a content company, but they also happen to be manufacturing some equipment, and it's expensive. They make
good money on though. I mean, they only pay $1,000 for that bike, and they sell it for $2,000. So I mean,
Dave, I'll put it this way, Dave. They truly are the Apple of this world because they are selling a premium product with so much gross margin. The only example where you see this is with Apple. So you should appreciate what they're pulling off. Literally the only reason why they're not profitable is because they're spending all that money on marketing. Now, can I just talk a couple other things? I want to get this out of my mouth while you still have a chance to trade, okay? So, first of all, the music royalty deal, Dave, that's done. Yes. It's settled. It's over. I know it's settled. Done. They so that could be a net positive for them this quarter.
They've already disclosed that in a previous quarter that they settled it, and they indicated that it was $5 million in 1 year that they spent. I think it was 2018 that they did $5 million. The lawsuit was brought in 2019, and it was like a $2 million cost to them then. Okay. That's already priced in. That's done.
All right, Dave, can I say something?
That shows you that this company is run by people who are just kind of fast and loose with the way they operate.
Okay, Dave. All right, let me continue here. Let me tell you. So, in addition to that, in the holiday quarter when they had huge sales, okay, they also had heavy discounting because of a Cyber Monday, Black Friday. They actually don't have that discounting this quarter, and I think that their sales are going to be equivalent to holiday quarter, not just this quarter, but next quarter with zero discounting, Dave. Also, virtually zero tread, so their margin will be up. Okay.
I absolutely agree with that.
Okay, here you go. We have celebrity after influencer. Listen, you saw the other day, LeBron James put on Instagram. He was on his Peloton. All right, this is just building that network effect. Okay.
Well, they're not discounting. They are giving a 90-day free trial to their app instead of the normal 30-day. So they're not going to have any revenue from this high revenue.
I'm talking about the product. Now the app side, they are doing a massive free 90-day trial on the app. But again, remember, that app is a customer acquisition tool, okay? And it's designed to be ultimately, at the end of the day, it doesn't cost them anything more to give out a free app subscription, guys, because they already have the talent producing the content. So that is actually an amazing thing that they have going on. So listen, there are risks. There are new social features, by the way, guys, coming out. But here's the thing. When you actually spend the time to dig in and go in deep on every social conversation of every Peloton owner, here's what you walk away with. You walk away realizing that this is something special. And listen, I don't own a Peloton. I never will because I have lower back issues, but understand something. This is something special. They have done something here which is magical. It is bringing so much joy and connectivity into people's lives that I do not think this is just going to be a pandemic push. I think Peloton is potentially going to become one of those special companies like Lululemon, like Amazon, right? Like Apple, like Tesla, one of those companies we point to that go, wow, they took such a big risk. No one believed it could happen. And all of a sudden people are doing things and spending money and acting in a way that we never thought people would act. Because if you look at the history of the fitness industry, it is horrific. You have a bunch of companies come out, they're popular for 6 months, and then they end up in a garage and people hang their clothes on, right? That's
how
the short
I
thesis.
think of most home equipment ends up as a hanging rack for clothes.
Yeah, but what you don't see about the Peloton
I'm just gonna
is
say,
it's not like that at all, right? Because it's so engaging that you want to go and engage with the product. And you spend $40 every single month, right? And so
Now,
if
Jordan,
you stop
you are
using the product, you go and sell it to somebody else, and then they start paying $40 a month for the product.
I can see that. It has a viral effect. It definitely does. And
Right.
I can see their sales being as good as they possibly can be, and this being another holiday quarter. But I think the stock market has already said, we know that this is a holiday quarter. We know we've been buying the stock up. We're pushing in on our highs here. So I can't wait to see these earnings. I can't wait to see what's going on. We're about, 3 minutes away from the close of the market.
So you're not buying Peloton, is that what you're saying?
I'm not buying Peloton. You have not convinced me. You haven't convinced Aaron Lewis. You haven't convinced a bunch of people here in the chat.
I don't want to convince people in the chat because, let's remind everyone right now, we're not financial advisors. Do not do what we do. Our risk tolerance is very different from yours. This is for educational purposes only and for entertainment. Honestly, guys, do not copy our trades because we don't understand what your risk tolerance is. We only trade for ourselves.
I don't think most people could copy your trade anyway. Can you tell me, just so I have it, what exactly you're in?
Yes, I have 600 right now. I sold all of my 30 call options at about close to $250,000 profit. And now I took just the profit and I purchased 600 of the 35 calls. I mostly at a price of 4, okay? So I bought those for about 4 each. That's about $300,000 on those call options. And then I have my core Peloton position that has about an average price of about $31 a share. And that is, I think, 25,000 shares. I'll confirm that for you right now. 30,000 shares, excuse me. So I have 30,000 shares of Peloton at an average price. It's probably, honestly, could be closer to $32 a share. But that's it.
Well, I wish you well. We're about 2 minutes away. Jordan, I know you also have, I believe, just shares in Peloton.
No, I've got shares and calls.
You have calls
Yeah, he
too?
does. Jordan's going in with options
going deep.
today.
This is big.
I love it. I talked him into it.
I'm not nearly as big in it as Chris, but
But you
good
are
size for me.
the one who's into biking. So you're the actual cyclist among us. Do you have a Peloton?
I do have a Peloton.
Okay.
Here's the thing. I use it, when it's too hot outside or when it's raining, because I prefer to be on an actual bike. My wife uses it probably more than I use it. But I think it's a really nice piece of equipment. And it's really engaging when you use it. It's a lot of fun to use. And just for a backup type of thing, or like a scenario when I can't get outside, but I've got 20 minutes to an hour, then I can go fire up a class and do the exact workout that I want to do. So it's
Did you
I'm
consider
not their core customer. You know what I mean?
No, you're definitely not. You have higher end bikes that you'd rather ride out in nature, and their core customer is in home doing a spin class with a monitor.
Hey, Dave, if I'm going to take your side of this for a second, I do think the biggest risk going to this quarter is that it's not going to take a lot to get Peloton to go down here. Even one line in the earnings report, even if they have a great earnings, if it isn't spectacular, I can absolutely see a pullback from these levels with the run up. There's going to be a tremendous amount of profit taking. There's a lot of retail traders in the stock right now. That would be my biggest downside, I think, and also the chance of a supply chain issue that I miss. Those are the two things I'm looking out for that I think could crush me on this earnings report.
It does look like going into the market close, the stock is dropping a little bit. It's at $38.20 right now, but it does look like the whole market is going down a little bit here at the end. So I don't think that's an indication of anything on Peloton. But we are on their page, and I'll be refreshing, hoping to get these results
Dave,
to you as
this
soon
is
as
like,
possible.
I just lost my breath. I just realized it's going to happen here in a minute, and it's just like, woo!
This is as exciting as live YouTube can get.
Oh, goodness. I can't even handle it right now. This is like...
You have $300,000 of options on the line, and what is 30,000 times
it's a lot.
31? $930,000 of straight up stock.
I can't even I don't even know where. I can't even look at this.
$1.2 million on the line, and we're about to see what happens in mere moments. And we will, depending on how things go, and if there's anything that we think we might need to listen to on the actual conference call, that is scheduled for 4 o'clock Eastern, 5 o'clock Eastern, 4 o'clock Central, about an hour from now. So we'll have to see if we want to stick around for that. Their investor relations website still does not have a release other than the release a few days ago announcing that they would be announcing their earnings. I'm going to check some news sources here.
I'm reading all the fake stock twits posts right now, and it's like I shouldn't even be reading them because you can't trust any of them, right? Like it's. I don't know. I still to this day am shocked that they don't halt stocks through earnings reports to give some digestion time, right? Either to like a 15-minute window.
They wait until the market closes, which does make sense, but they don't halt after hours trading.
Yeah,
so they might as well do it.
They used to do that. I'm shocked that when they stopped doing that.
It's kind of an awkward situation, but look, it looks like the chat people are seeing it. It should go to 44. Domid says that it's trending up. It looks like it's running up.
But are earnings out
again? Is it actually running up? No, it's running down. I think my chat must be.
No, it's just
77 cents.
It's not doing anything. It's just
it's nothing. It's nothing.
Okay, so this is my real time chart.
Hey guys, don't mess with my head in the comments. You guys are killing me. Like I will literally have a heart attack right here on tape.
Some guy said, "OMG, Peloton at 55," and I'm like checking my phone.
Don't. But Hey, listen. At least I took I took those profits. I bucketed 230, 240, got that in. So in a worst case, if it drops $10, at least I'll lose a little overall on the whole Peloton trade, and I'll lose a lot today. But are you seeing anything, guys?
I'm not seeing anything yet. I'm refreshing my browser just to make sure that I have the most recent information.
Here's my favorite headline. Peloton shares are trading higher, potentially in anticipation of the company's Q3 earnings report after close.
That is a robot that writes those
Is that
kind of
even
stories.
necessary? But it's Benzinga. Is that robot?
I think they do have some automation there.
Yeah.
It does look like, though, it has gone down to 37.
Oh, it's down.
36.43. I wonder if the earnings release is out.
It had to come out. It had to. It's down $2. I'm on their I'm trying to get on their investor relations, although they never.
It just jumped back to 38. I mean, it's all over the place. Just going nuts.
Did it though?
Yeah, I don't know.
This is where we need some like pre-recorded music or something to keep everyone entertained while we're waiting for the actual announcement.
Oh, it did, Jordan. I think it did. Now it's 37 again. Oh, 38. So hopefully that wasn't the earnings.
Spread is crazy. It's 37.50 to 38.90. There we go. Now it's moving up.
Yeah, and I think on my chart, I have an average between bid and ask.
Oh wait, it's out.
Oh,
I think the release is out. Wait.
The after hours is
over $40. 39, 40.
I'm reading it. Hold on, I'm reading it. Wait, I'm not reading. All I'm reading is they're saying it's PDF version. No, wait.
I think you're reading the story about them announcing the story.
So it's not out.
Yeah, that's not out yet. It has to be out on some news service though, so I'm going to keep looking.
The chart you're showing, Dave, every time I look at it, I'm having a heart attack. That drop is just not okay.
Here, I'll zoom in more because it's come up. I'll zoom in as far as I can because it actually has come up since that low point, and that makes you feel a little bit better. That in that shaded blue area, that's the after hours. Hopefully, we'll be able to get the results.
There should be. Didn't you agree? There should be a better, even way for earnings announcements to come out that everybody knows where to see them in real time. I mean, it's so ridiculous because the algos get the trade on this stuff. It's ridiculous. Yeah, I'm doing simultaneous Google search, broker search, and refreshing their. Oh, are you on a Ameritrade too? I'm going to go. Ameritrade sometimes doesn't I'm getting it out. I'm on Schwab and it's pretty slow. I'm going to actually go to my old E-Trade account because they seem to be pretty fast with news. Yeah. Oh, Jordan. Yeah, I just saw
525 versus 470. I just saw that headline.
Wait.
So a beat of 525 versus 470.
Yeah, but that doesn't really mean anything. Is there what kind of guidance we're looking at?
I don't know. I'm not looking at anything yet. I'm just looking at headlines on.
What's the revenue number? Do you have the revenue number for me?
I have nothing.
Because that's an earnings number.
Yeah.
Oh, that's revenue beat.
It's 525.
Versus 488. Okay, that's fine. That's good. But I want to see more than that. Do they have any? I got CNBC. Could you put on CNBC, Dave? See what they're saying? Yeah, give me a minute.
We're the worst.
We broke 40. Subscriptions up 94% year over year. That's definitely a huge beat. I got it on my TV. Yes.
Yeah, we're
digital
over 40
subscription
now.
64. Oh, I forgot Win has earnings. I don't even care. I've got a huge Win position too. All right.
You know what else is up after hours? Lyft.
What is?
Are you still in Lyft?
Gosh, don't even talk to me about it.
There are several things being reported after hours. Let me just pull up my notes while I'm waiting for CNBC to confirm my credentials so that I can.
I am so pissed that I can't get this report right now. Where, guys, if you're following this, does anyone have the report? Where on earth is the report? This is insane. It shouldn't be that hard for all of us to have access to an earnings report when there's live trading.
Okay, it is now on their investor relations site.
It is? Okay, hold on.
Peloton has announced its financial results for the third quarter of 2020. About Peloton. Oh, here's another link to go to for the actual thing.
I'm trying to find it right now.
Okay, here's some highlights. Ending connected fitness subscribers grew 94% to 886,000, and paid digital subscribers grew 64% to 176,000. Total members grew to over 2.6 million. Total revenue grew 66% to 524.6 million. 44.2 million total workouts by connected fitness subscribers, averaging 17.7 monthly workouts per connected fitness subscriber versus 13.9 in the same period last quarter. Average net monthly connected fitness churn was 0.46%. That's their lowest in the last 4 years. I they've even been around for 4 years. 12-month retention rate was 93%. The headline here is they beat on revenue, 525 versus 488.
I want to know about Q3. Did they say anything about Q3? Because that's where all the money is.
Well, it'll be their Q4.
No, it'll be. Oh yeah, okay. Wait, this is Q3. I'm sorry, Q4. Excuse me. This next quarter. Anything on? I gotta get guidance. That's all that matters here. Or are they saving that for the call?
They might be saving it for the call.
And I don't even know where you're getting this, Dave, because I'm on their investor relations and I don't even see it.
It's definitely on the investor relations page.
Hold on, I'm refreshing.
Okay.
Does it look like they have no guidance out right now? Or did they say they're not providing guidance? In their financial discussion section of their release, under revenue, they talk about during the last few weeks of Q3, we saw a significant increase in demand for our bike, which has continued into Q4 so far. Increase in demand. We knew that was going to be a thing, right? Q4 and full fiscal year 2020 business outlook. Yes.
Q4 fiscal year 2020 highlights. 500 million to 520 million total revenue, 128% growth at midpoint.
Wait. What's that for, Dave? Is that for next quarter?
This is Q4 2020 highlights.
So this is going to be next quarter.
This is next quarter.
Okay, so say that again.
500 million to 520 million of total revenue expected. That's 128% growth at midpoint.
Yeah, that's up.
55 million to 65 million adjusted EBITDA. That's 11.8% adjusted EBITDA margin at midpoint. Full fiscal year highlights, they're expecting 100.04 million to 100.05 million ended connected fitness subscribers, a growth of 104%.
That's up from the prior guidance. I know that.
Was it? Okay. 100. Let's see. They have a 1.72 billion to 1.74 billion total revenue.
That's way up, I think, from prior guidance.
That's for the year. 30 million to 40 million adjusted EBITDA at midpoint. 2% adjusted EBITDA margin at midpoint. They entered Q4 with a backlog of bike deliveries in all geographies, and sales will continue to surpass expectations in the first several weeks of Q4 due to COVID. Unfortunately, the unexpected sharp increase in sales has created an imbalance of supply and demand in many geographies, causing elongated order-to-delivery windows for our customers. Over the past several weeks, we have worked closely with our manufacturing partners to accelerate the supply of goods, but as a result, we are incurring higher costs in order to expedite shipments. We do not expect to materially improve our order-to-delivery windows before the end of Q4, which is next quarter for them. Our guidance assumes we do not resume tread sales prior to the end of fiscal year 2020. For Q4, we expect average net monthly connected fitness churn to stay under 0.75% as we continue to see better connected fitness reactivations and elevated levels of member engagement. This next quarter, forward-looking, they're saying they expect a gross margin of 42.5% to 43.5%. They expect connected fitness product gross margin to decline year over year to 40 to 41%, which reflects additional shipping costs to expedite product shipments and costs associated with COVID, including hazard pay for warehouse and delivery teams. The decline in connected fitness margin is partially offset by a mix shift to bike deliveries. For Q4, they're expecting subscription contribution margin of 63 to 64%, year-over-year improvement in subscription gross margin and subscription contribution margin are driven primarily by the leveraging of fixed cost of content production. They expect a significant reduction to sales and marketing expense in Q4, as you were predicting, Chris, due to lower advertising spend given elevated sales levels, partially offset by costs of extending Peloton digital free trial to 90 days with strong sales flow through, leveraging fixed costs and reduction to media. We expect Q4 adjusted EBITDA of 55 million to 65 million, representing an adjusted EBITDA margin of 11.8%. For fiscal year 2020, they expect adjusted EBITDA of 30 million to 40 million, representing an adjusted EBITDA margin of 2% at the midpoint. Reconciliation of non-GAAP, blah, blah, blah. That seems like it's going to be highly technical. They are planning to have the call. There's a number that we can dial in, Chris, if we would like to ask some questions. I'm planning to do that this time because we always seem to be very frustrated with the questions that are actually answered. They have a safe harbor statement. All of this is available on their investor relations website. Their 3 months ending March 31st, 2019 compared to 2020. 2019, they had 457,000 connected fitness subscribers. 2020, they had 886,000.
Here's the thing, Dave.
Yeah.
That's a big beat, and I'm telling you right now, they're sandbagging based on those numbers for Q4. They're still sandbagging. They're going to beat big this next quarter. If they're only saying they're going to do the equivalent of this quarter next quarter, no way, no way. They'll beat that number, but they know that. Okay, so it looks like we're up at about $40. Is that right? After hours,
we're at $39.80 right now, which is a high for the week.
So here's the deal.
It's an all-time high.
So we knew that Peloton's going to be tough to hold these levels. We knew that, right? It's doing a pretty good job right now, up at 40. I actually think if they can hold through and have a positive conference call, I think they'd have a good shot at holding this tomorrow. I'd love to see this at 40, or anything above 40 tomorrow would be killer.
So what are you doing?
This is great.
You're going to be selling out of your call options that are a $31 strike price. You'll hopefully be able to get $10 for those.
$35 strike price now, guys.
Yeah, I've got both of us have 35s.
Yeah, you have the 35s.
Yeah, we'll be selling out of those tomorrow for sure. Out of the options. The options expire on Friday, guys, so they only last for a couple days anyway.
Now, the big question, are you holding on to your $1 million position in Peloton? Are you going to stick with this company for the next quarter thinking that they are sandbagging and you think that they're going to potentially have a surprise at the end of their Q4?
I know they'll have a surprise. They have a surprise that they can unleash whenever they want. It's called,
even though they've just released forward guidance on what they're expecting, you think that these guidance numbers are lower than they're actually going to come in?
I know they are. They have to be. And also on top of that, again, they have surprises that they can announce to delight, this is what they say, to delight the Peloton members whenever they want and us investors. And that's one of their 3 new products. I'm telling you, what do you think is going to happen when they inevitably announce the rowing machine? Jordan, when they announce the rowing machine, how big of a deal is that?
I have no idea. I don't want a rowing machine.
I can tell you but you think that's a big deal because you're really excited about this company.
Yeah.
I don't think it's a big deal. I do have stats on the home fitness business in general. The exercise bike segment is an anomaly. It grew 16% last year, but the overall home fitness industry down 9%.
Dave, there is no home fitness industry outside of Peloton and bikes. Peloton has made this into a home fitness. I mean, what else do you have? Bowflex, dude? Like, what are you comparing it to? Here's the thing, guys. Understand this.
I'm comparing it to the $850 version of the Peloton bike that Peloton's charging $2,500, $2,300 for. You can buy the same thing for $900, and it also has a connected fitness type thing. Peloton is suing this company.
You'll still use the Peloton app. You know why you're going to end up using the Peloton app, Dave? Because
even if it doesn't connect to their bike?
You will use it no matter what, because it has the best instructors. These guys are celebrities. They are creating celebrities. You don't understand how into these people Peloton members are. They are obsessed with their people. All right, Dave, let me ask you a question. What do you like to do every morning? What do you like to wake up with every morning? I already know the answer.
The Today Show.
That's right. Do you realize, Dave, that the Peloton instructors have become a part of the lives of the people that are Peloton members? That's what the market doesn't understand. They are literally becoming part of their life. That becomes the stickiest thing ever. If the Today Show, Dave, were a Peloton that makes $40 a month off you, the Today Show would be making $500 a year off of Dave Hansen. Peloton is going to make $500 a year off of every family that they build a connection with around health and fitness, okay? And it's more than bikes, Dave. People are using it for yoga. They're using it for breathing. They're using it for stretching. They're using it for walking. They're using it for everything because it's a way for people to feel connected and positive about their health. I'm telling you, even if you don't use it for a few months, you'll still pay for it the same way you still pay for your gym membership. Okay,
and
because you don't want to lose that connection.
I agree with you. If you can become a part of people's life, you have a winning product. Apple has become a part of your life. You don't leave the house without your iPhone or your Apple Watch or your
Can we say something
MacBook.
else?
Brian Cruz in the comments was asking about this. Yes, this just arrived minutes before we went on the air. I have not even opened it yet. I'm planning to open it right now. He wanted to know if I went to the store to buy it.
How about me, Dave?
Are you hijacking?
Yes, I forgot. Chris, for the first time, he is on his new... Look, he's almost in high definition now. He's almost...
I'm on my iPad Pro camera doing this broadcast.
His face is the color of my shirt, though. Did you get is that the camera?
He's very saturated right now. I think it's just a side effect of... I don't know. Maybe he's so excited. He's flush with excitement.
We'll work that out.
Look how fun it is to open. This is a live unboxing. Most YouTubers have pre-recorded unboxings. This is the real thing. I'm so excited to have this iPad Pro. This is the third iPad. I bought the mini, and I actually gave it to my dad because he wanted to be able to talk to people on Zoom and have Zoom happy hours with his former work colleagues and friends.
Hey, Dave, let me say, you said something
size.
about Apple. Can we make an analogy here? You just said, okay, there are a lot of people in our comments are saying, I'll never ride a Peloton. I'll never do Peloton. Do you know how many people still exist in 2020 that will never get an Apple product? They're committed to Android and to Google, right? Like, they don't need everybody. Peloton doesn't need 100% of the market to become a $40 billion company. That's the thing, guys. They don't need you. They don't need everyone. They just need to be the leader, okay? And even if there's someone coming behind them who's a strong number two, doesn't matter, okay? Peloton just needs to be the leader, creating a brand new
sales on the platform
economy, essentially, of fitness.
Yes. No, I agree. And like you said, my Today Show ritual is something that the only reason I still have DirecTV is so that I can have an always on source that can turn on in the morning and already have the Today Show playing without me having to go on a remote and open an app and start streaming the Today Show. Like, literally, that's the reason that I still have it. I now have CNBC queued up. They haven't yet talked about this. They're still talking about the Etsy earnings, and they had the T-Mobile CEO on. T-Mobile also had earnings come out, and they're apparently up. These are companies that I don't really follow. Do you guys follow Etsy or?
Yes,
T-Mobile?
I did. And by the way, Peloton is now down after hours, still up for the day, $1.30. I knew these levels are going to be tough to hold, and I think that's totally fine. There's going to be a lot of digestion and profit taking here. This doesn't surprise me at all. Let's see how the conference call goes. Let's see how the market reacts tomorrow. I think it's really tough to kind of call what Peloton's going to do tonight, tomorrow, based on any report. So this is not super surprising. I'm just glad that there's nothing really negative in that report to take it down precipitously, $10 a share, which I don't think is going to happen tomorrow.
Well, let's hope not, for your bank account's sake.
So I want to listen to that conference call because I feel like, Dave, this is like early days Apple, early days Tesla. It's really exciting. Listen, I've read the transcript of the last couple conference calls 2 or 3 times over this week. So I've really been looking forward to this conference call. I think it's an important one. You kind of have a good
sense of what the way these calls go and how the analysts react, the kinds of... Do we expect Peloton is going to come out and say anything overly good or bad in the after hours conference call?
I am hoping that analysts kind of push them to further to kind of give more of the truth, which I think is more positive than what they're willing to put into their earnings transcript. They're always going to sandbag. They're a new company. It's a new IPO. They do not want to disappoint. Okay,
it's
Peloton
an inexperienced
does not-
management team. They don't have a lot of history running public companies.
Yeah, so Peloton does not want to disappoint. They're playing the game that all new companies play. They're sandbagging earnings, but the analyst's job, it should be their job, is to squeeze out the truth on this call. And hopefully they can ask the right questions, and it will give us the ability, and Wall Street, the ability to read between the lines, which is always the most important piece of these earnings calls. You got to read between the lines. That will ultimately determine how Peloton does tomorrow. By the way, there's so many earnings. Dave, Twilio's up. I heard Twilio's up. That's another one of our big stocks. Carvana is down though, which is nice to hear. I don't have Carvana, but I hate it. So it's down a little bit. Oh, down huge, someone's saying. Now I'm regretting not buying.
Look at that.
Puts
It's
in
down
Carvana.
12%.
It's down 12%.
Yes. But Peloton had a swing of almost 12%, 6% up, 6% down. They're back up to near even for where they closed.
Dave, we should have bought that Rosetta Stone yesterday. It's up today in earnings. It's such a junky company, though. I would never want to own it more than a day.
What's the deal with Rosetta Stone? Is that the language thing?
Yeah, but they're getting into literacy now.
Okay.
The problem is, Jordan, it's kind of like the difference between Google and what used to be Overture or Yahoo Search back in the day. So basically, the competitor to Rosetta Stone uses artificial intelligence to actually have you speak to a bot in a foreign language, and you get better speaking to the bot. Rosetta Stone does the same thing, but they have to hire people to talk to you because they're so bad at tech. So
Wow.
They are the oldest school version of learning. It's so bad. I don't know how they last more than another few years. I think they'll be destroyed over the next decade just due to lack of tech.
So
anyway, I'm going to look at some of the comments here. I'm so glad to see Twilio up though. Oh, is Square today, Dave? I didn't know Square was today. Jordan, are you looking at Square?
PayPal is down. PayPal missed on earnings, and they're down 4.3%. Lyft is up 17% after hours.
Square is down
on revenue.
Yeah, Square's down 5%.
That's okay, considering where it was. That's not a big deal. I'm fine with Square being down 5. Anything else that we have in our portfolio that's out right now?
I want Jordan to pay close attention to this Lyft. It is up 15% right now after hours.
How are you you guys are still in those things, man?
I'm not. I sold mine.
I've been inches away from selling it all so many times. I don't even want to talk about it.
So for our viewers that don't know, we were in Lyft when it was a private company, and I sold my shares the first day I was legally permitted to sell shares. I don't know. I might have.
You sold your shares before you even got the shares.
Yeah, you were selling options against your shares, I think.
No, you shorted your shares before you got them.
I'm not admitting to that, but
Grubhub is down 6% after hours. They had earnings today as well.
So, when's the conference call, Peloton? Do you know when it is, Dave?
Yes, it is scheduled for 31 minutes from now, and we will bring that to you live.
Oh, Peloton's back up to almost 40.
Yeah.
I like that. Guys, so this is, listen, I want to talk to kind of the people that have been with us through this process. If you've been with us since February, this has been the ultimate roller coaster for us. It's been the best 2 months of trading in 32 years for me. I think for the team, mostly in general. And this Peloton is really cool to get to go through the full cycle on Peloton. We shared it with y'all over the last few weeks. You were in it with us. It was risky. But hey, we believed in the call. We had high conviction. I want to say something right here, right now. I hate it when I've heard this on Twitter the last few days, what do they call it? Like hogs get slaughtered, pigs get slaughtered, right? What's that term? I am a pig, okay? I only invest when I have conviction in a company, all right? If I don't have conviction in a trade, I'm not investing. But if I do have conviction, Damn right, I'm a pig. I will be a pig. I will go all in. I will lever up. And no, I'm not going to sell based on price or based on past gains. If you're selling because you already made money or you lost money, that doesn't make any sense. That should have nothing to do with your thought on a stock being underappreciated based on information you're trading, or overappreciated based on information you're trading. I don't let price action determine my trades. I don't allow past gains or losses determine my trades. So I don't care if I quadruple my money. I don't care if I 10x my money. If I still think I have an information edge that hasn't fully been digested by the market, I'm going to continue with that trade. And listen, call me a pig. I don't care. Sometimes you'll get slaughtered, but not because of that, because you got it wrong. You get slaughtered when you get things wrong. If you would have if you've been in Amazon since $50 a share, right, $100 a share, be a pig. Be a pig to $220 to $500 a share. As long as you continue to feel the market has it wrong and you have differentiated information. Anyway, I had to get that out because I know a lot of people have been throwing that term around on Peloton. I'm like, forget it. So many people call me. They're like, hey, it's up to 35, up to 36. Should we sell? I'm like, well, I don't know. I still think that they're underappreciating the storyline, right? That's my thesis. I'm sorry, Dave, when you say they're going in with this call, is it right now?
It's coming up at 4 o'clock. So okay. Half hour from now. So
someone said when earnings happened. What happened there? Let's see. Oh, they're down $1.30. No big deal.
Yeah, win is pretty much even, it looks like. I have so many things on my chart right now that it's hard to even see it, but win is basically right here at unchanged.
Nice.
If we go out to a wider view, we should be able to see that win is still down here at minus 40% in a 3-month chart.
So guys, this is really interesting. Based on Peloton right now in this trade, do you remember when I first started trading the pandemic in late February, and I started with that first put on Win actually and some of the travel stocks?
Yep.
I said, hey, this is going to be a long shot, but wouldn't it be cool if through this whole pandemic and the market crash that we thought was going to happen, we could ride that downdraft in the market all the way and then ride it all the way back up. And by the time we were done, we would double I was hoping that I could double the size of my portfolio. The portfolio that took me decades to build up, what if I could double it? What if I can generate 100% return in like 3 months on a portfolio that took me decades? You know what, guys? I am, as of this moment, I don't want to get this wrong. Oh my gosh, I am $200,000 away from doubling my portfolio. Could you believe that? I'm literally, that could happen by tomorrow morning if Peloton pops up another point or two. So I have generated 100% return on my portfolio from February 20th. Very close to 100% from February 20th to today. Basically shorting the market, shorting the casinos, shorting all the travel stocks from late February all the way through. And then about 2 days after we bottomed is when we started going long on everything. We got rid of our shorts, right? And we didn't just go long, we went levered long on everything. We bought, 5,000 shares of Amazon at one point, right?
Yes.
On leverage. And we've been riding it up, and it's come full circle. Now, hey, we could make some mistakes and lose a lot over the next month or two. But it's cool to see. What if tomorrow I hit that mark? That would be so mind-blowing to me that on a portfolio that was not a little portfolio, guys. We're talking about a portfolio that's, at the time somewhere, but, not quite, 8 figures, but almost 8 figures, that has now doubled since February 20th just based on arbing information. Right.
That is
so fun.
That is the ultimate story. Like this is a remarkable time. We've had a very volatile market, and to be able to not only see it clearly enough and step back from all of the noise and just be able to know when the market, not know anything, but be able to be on the right side of the market as it's making such big swings. knowing that there was a time when no good news could possibly come out. The market has to go down, and buying giant leverage positions against the market, something
But
that
do you remember when we were doing that, Dave, and the market was only down like 2% and everyone was like, buy the dip. And I was so nervous. I was like, wait, but there's a pandemic that's literally hitting like right now, like right now.
Yes.
And by next week or 2 weeks from now, it's going to be like the worst thing to happen in 100 years. And nobody was taught. CNBC was like, oh, buy the dip, buy the dip. I was am I crazy? Am I mentally insane?
Our friends were texting us. I remember I was in Mexico. I got in too late into this whole thing because I didn't know what was going on and lost $500,000 or something. So it took me longer to get back out of that hole and now be positive. But I think I've made more than $1 million in the past month. Nathan was one of our commenters that said he's been watching since I lost that $500,000, and you were bragging about your big gains then, Chris. It took some time for me to get serious, but this is now my job, and I'm watching the market and watching CNBC again, and I'm just glad that we could share, the way we're doing this, the thought process that we have, and I think it's actually really good that we've been able to do this a couple times a week just to kind of give an update on what we're thinking and what we're investing in and all of that.
Well, I think it's so fun because, most of us just get to watch CNBC, whatever, or Bloomberg. And, you see these people who most of them have never traded in their life, or if they do trade, a lot of them are just selling books and stuff. They're like selling programs. They're trying to make money off you on the side and leverage their notoriety on CNBC. But none of them have any track record listen, you could check Jim Cramer's track record. I'm going to let that speak for itself. You can Google it and see what it is, right? So none of them have any track record, right, over any long period of time. And you're just wondering, why am I listening to these people? Like, why am I? And like, everything they're saying is wrong almost all the time. And people have joked about this. If you probably did a tracker and just traded against what the talking heads were saying on CNBC, you'd probably outperform the market by like 2x, right?
You probably would.
This is the perfect situation where you can actually say, hey, nobody saw this coming except for the people that did. And there are people that do see it coming. There are people out there. We're not the only ones. There are other people out there that have traded this and traded it really well. There's a handful of hedge fund managers. There's people out there in their garage who are up 40, 50, 60, 70% through this process. We're not the only ones. Now, I don't know who else has been up 100% since February on that big of a portfolio. I hope maybe there's someone else. I'd love to meet them if there is. I'd love to have lunch with them and we could share our story. But I mean, you got to know that it could happen, right? You could actually do it. It could absolutely happen. You just have to not listen to the experts and learn to think for yourself. Because I think a lot of the people that watch this market, if you really think about it, you probably knew when it was happening. You knew when the pandemic was hitting that it was bad, but the whole world was like, it's not bad. CNBC, buy the dip. What an opportunity, right? All these people on FinTwit. And
can we talk about the leak that you shared yesterday of the Barstool Sports guy's screenshot of his account where he's lost $15 million since he started day trading in January?
Yeah, I don't know if it's true or not, but I saw it on Twitter, and it was a huge thing on Twitter last night where what's his name? Dave. This guy is hilarious, man. The Barstool Sports founder.
It's great content, but terrible investing.
Yeah, someone shared a snapshot on Twitter of his screen of his app, his trade. It was like an E-Trade app, and he was down. It said 75%. Like $15 million. Was he down $15 million since January 1st?
$15 million, yes.
So again, who knows if it's, I don't know why it wouldn't be true. It's just a screenshot and it was going
did
viral
you share that
on Twitter.
in our group chat?
Yeah, I sent it to you guys. I sent it to Varsity.
Oh, here it is. Yep, okay.
Anyway, it was listen, but you know what? I don't care if the guy makes or lose money. He's so transparent. I love. He's kind of like, listen, we made money. We got the right pick. We've been doing this for 30 years. He didn't do well, but he's been so transparent and non-arrogant about himself. I love that. Like, I love how he's so real about what he does. I'll watch that. I'd love to have him on the show.
That would be fantastic. We should reach out to him. Do you know who else we should reach out to?
And by the way, if people that watch this, if you guys would go on Portnoy's channel and tell him, hey man, partner up with the Dumb Money guys. They want to have you on the channel. It'd be so cool to see us together. He could talk about what he did wrong. We'll talk about what we did right. I think it'd be a really cool collab. We'll reach out to him. But if a bunch of y'all go over there and ping him, say, hey, check out Dumb Money. They made 7 figures on Peloton. They made 10 figures almost since the start of this whole thing. I think it'd be a really cool collab to show both worlds.
Do you know who else we need to reach out to? Elon Musk. We're planning to talk about Elon on Friday's Dumb Money Live. We're not going to do one Thursday because we did this Wednesday. But could you imagine getting him to come on our live show?
Hey, it would be awesome. By the way, CS at 339, he said stop using the word pandemic. We're using that word because YouTube doesn't allow us to use other words. If we use other words to describe this, our account will get flagged. So that's why we use that word pandemic. If we come up with a better word, I don't care, we'll use it. That's why you keep seeing us. Yeah, can we use the virus? Is that a word? Can we say that, I guess? We'll say the virus from now on. They're saying someone said I know the guy's lost crazy money. The E-Trade thing was a mistake in his account a while ago, they're saying. Yeah. Listen, he's lost so much crazy money in the last month. I don't know if it's really 75%, but it's been bad. I have a lot to talk about on Elon, by the way, because I want to try to get behind the psyche, behind why he's doing what he's doing, to figure out what we need to do about Tesla. Okay, because now that this is behind us, now that Peloton is behind us, I don't have to think about Peloton anymore. Because guys, I don't want to think about Peloton for like a month. All I've been doing is Peloton 24 hours a day. It's been insane. I'm telling you, there's not a social mention in the world related to Peloton that I have not read. I want to get back into Tesla and figure out what on earth's going on and what our position is. So the next show that we do on, is it Friday, Dave?
We're going to do it Friday. 11 Central.
Jordan, are you still in Tesla?
No.
You're completely out, which is mind-blowing to me because that was your forever stock.
Hey, the guy went nuts. Like I can't help it. Sorry.
So if you don't watch our regular channel, which has been silent for a couple months because we don't do startup meetings right now, but it's Dumb Money, our regular YouTube channel, the dumbmoney.tv. We had an episode called Our Forever Stock on our Prime, and it was so fun. We talked about our forever stocks and why they were. You got to go back to that episode right now and watch Jordan talk about Tesla and know that he no longer owns Tesla. It's been like 3 month and he's already sold his forever stock.
That forever was not a very long time.
You're not allowed to sell your forever stock. even though I got nervous about Disney, I sold 75%, but I kept 25%. I kept my core Disney holding because I'm just like, it's my forever stock. I'm not allowed to sell it.
Although, my forever stock was actually the S&P 500 ETF. And not only did I sell it, I shorted it and I bought options against it. And those worked out for me. But that is my forever. Once we get out of this craziness and we can get back to like a normal market that is a somewhat just back to reality and isn't swinging wildly in every direction, then I'll be back into my S&P 500 ETF. In the meantime, you have to pick winning companies and not be in or short losing companies. That's the only way to invest this market.
Yeah, that's right. And that's what we're focused on right now. Guys, we're not super focused on macro stuff, but we are watching. We talked about that a couple episodes ago. If you want to know how we feel about the next market crash, what we're looking for, whether the market's going to go directionally up or down, watch the last episode. It's like a 2-hour episode where we did nothing but talk about that. Going forward, we're going to be more focused on picking individual winners and losers and the thought process like Peloton today, like Shopify. Man, Shopify's up another $50 today. It's insane.
Out of control. It was up 7% today.
And also, we're short a bunch of stocks too. You know, we're
Which, by
short
the way,
like.
So I talked about how I had sold covered calls on pretty much all of my big holdings, not knowing which direction the market was going to go to guarantee some income. These have all worked out quite well for me, even though I did have my gains capped by these calls. My Shopify call options were lost $38,000 for me, but the Shopify stock made $47,000 for me. So I'm actually doing good, even though the stock is going to be taken away from me, or I'm going to basically close out these positions. But it's working out. This is my new strategy. And I was talking to you last night, Chris. I think you're considering doing this too, because it's so hard to like keep being right on, is this market going to go up or down?
It's
and
hard.
Trying to know the macroeconomics of it. There's no way to predict that.
It's hard. By the way, our boy Drew is here. He said, love me some shop. Drew, you also love you some PTON, man. Drew got into Peloton yesterday or 2 days ago. I think our buddy Terrence got in it as well. Jordan, people are giving you a hard time about being too hard on Musk because he has said this exact thing in the past, and that's what we're going to talk about next episode. We're going to look into when he said this in the past, what his motivation maybe was then, what his motivation might be now. We're going to really try to kind of lift the covers on, is he messing with us or is he messing with Wall Street? What is his goal here?
I actually have a theory. I need to do a little more research on it. Let's not share it now. I have a theory of why he might have tweeted that and why it isn't actually insane that he tweeted that.
Oh, okay, Dave. I'm not going to say it, but I have a theory too, and I'm not even going to talk to you about it before the show. Okay. Okay. We'll both reveal on our next show why. And by the way, based on my thesis, I might actually buy more Tesla. I have Tesla. I kept some of mine. I might go long again on Tesla, or at least do some covered call writing like you, Dave.
Yeah. It's a good one to do covered call writing on because it is a crazy stock. And if it's something that you're comfortable holding anyway, it's something that you might want to have in your portfolio. It's a good one because it does have some high premiums. But so do a lot of the companies that we like in our long term. I mean, Amazon premiums are somewhat high. Apple premiums not quite as high just because the stock price isn't as high, but there's some money-making opportunities out there.
Dave, there's so many stocks that like I need to start researching now that Peloton is behind us. Like one of my all-time favorites that I've traded so aggressively over the years, Five Below. Five Below is a stock that we've been trading since its IPO. I have a thesis on Five Below. I'm not going to talk about it. That will maybe be on an episode probably next week. But I have a lot of work to do on Five Below this week. I have a handful of other names we have work to do. By the way, we have more earnings coming up this next week. Guys, we need to kind of pull that earnings chart. Jordan, are you still long right now on like the Home Depot lows? Because I am. Are you still good there?
Mm-hmm. Yeah, I might buy some more lows. I don't have any lows at all right now. I own Home Depot.
I added Lowe's this week. And that I'm going to do more work on Home Depot and Lowe's, more work on Five Below. I am still short Cheesecake Factory, guys. By the Evil Genius 007. Did they come out with earnings today? Was that today? I didn't even look. What happened there? They're up a little bit. I'll tell you where I am on Cheesecake. I'll pull it up right now and tell you if I'm up or down overall. I might be down. Let's see, Cake. I am overall. Oh, this is a Ameritrade app, man. I am down. I shorted at 19 and it's at 1970, so I'm down on Cake. Ruth, I might be down a little bit on Ruth as well. I'm way up on Dave and Buster's though. Made a lot of money on Dave and Buster's. Carvana. Wait, $84. I shorted it at I'm about even. It looks like. Aren't Carvana. Anyway, a lot of individual equities that we're going to be looking into over the next week. And we'll have a lot more debate next week about opportunities. I'm going to be pulling all the earnings. Hopefully there'll be some good earnings reports coming up next week. I'm worn out this week. Other than Tesla, I don't want to talk about any more like deep dive research
this was a big week for earnings. We've been doing this the last 2 weeks have been insane. And just to see how many like Uber is up because Lyft was up, and all of these things are.
So look. Some of our Chewy's. I'm long Chewy's, by the way. DraftKings is one of these stocks that I just have never spent. Haven't put in the hours. I'm going to start to put in the hours on some of these other, highly traded names like DraftKings. Let's see what else here. Oh, Yeti's. Yeti. I forgot they were public. Yeti's public. I got to look into Yeti.
I know that Carvana is a company that you're interested in, and they went from 92 at the close down to 81, so that's a big drop.
Oh, Dave, guys, Jordan, Roku's tomorrow, man. I didn't know Roku was. Is that tomorrow morning or tomorrow after hours? We got to dig back into Roku because their data is looking really strong. By the way, I won't even say where I get it from, but I have web traffic data that I pay for. I pay a pretty penny for it. It's like $15,000 a year to basically get 18-month historical web traffic data. And the new web traffic data came out yesterday. So I need to pull the newest web stats on a lot of these companies like Roku. I didn't pull them yet. Guys, we are in Roku. We're long Roku. Dave, you're long Roku, right?
I love Roku. I'm long Roku, and their earnings are after market hours tomorrow. So
you know what that means, right? I just said I wasn't going to do any more deep dive until, and now I'm going to have to do this on Roku. All right, if you guys want to know where we are, I'll maybe comment on my Twitter account at Chris Camillo or at Dumb Money should retweet what I do and stuff. So if you follow Dumb Money on Twitter, follow Chris Camillo, Dave Hansen, Jordan McClain, follow all of us on Twitter, and we might even have some conversations there. But we'll also have it on the YouTube channel. If we find something interesting. Like Roku, right now we have a core position in, but if we end up dramatically increasing our position in Roku or kind of selling it off prior to earnings, if we see something that's interesting there, we'll try to share it for our community so you at least can get an insight into what we're doing. But again, don't trade on what we say, do your own research. But if we find something interesting, we'll share it with you guys.
So we are about 9 minutes away from the expected start time of this Peloton earnings call. What are you listening for today?
Man, I just so much. I want to read between the lines. Listen, we talk about this all the time on earnings calls. By the way, when it comes to earnings calls, there is nothing more important that you could do as an investor than listen to not tens or hundreds of earnings calls, but thousands of earnings calls. If you want everyone's like, what book should I read? What investor book should I read? Hell, don't even read my book. I don't even care. But if you want to do one thing,
there's nothing as boring as listening to thousands of earnings calls, but it is a very good education.
It's everything, right? And you don't even have to listen to them. You could just read the transcripts. But there is something special about listening to them, because when you're listening to the calls, you can infer from tone and from pauses and from hesitancy, and you could kind of read between the lines.
When they publish the transcript after the fact, they can clean up the stumbling over not wanting to answer a question or looking for the right words to say something that in writing is going to come across as, oh yeah, that seems like a logical answer, but you can hear between the lines.
Yeah, and so you have to listen to these calls, because I might hear something in the Peloton call that would completely make me want to sell Peloton tomorrow. If I hear something that there's a risk factor that they're kind of hiding, or they're kind of circumventing, if they start to circumvent a question that I think is an area of concern, honestly, kind of like Amazon did when it came to, now I didn't sell all my Amazon, I sold a lot of my Amazon. I have my core position, but I was considering keeping a double core position, which is 2,000 shares. I ended up selling my double core, and I'm down to just a standard core position of 1,000 shares of Amazon, because I heard some things that kind of bugged me on that call when like Prime membership appeared to be down, and they would just keep circumventing the questions. So I'm listening for that type of stuff on this Peloton call. And if you listen to it with us and I hear something positive or negative, I'll let you know. I'll comment on it while we're listening to the call together.
I need to test my technology
what I really want to know, what I really want to know is supply chain. I want to know if that supply chain is solid for the rest of the year. That would be the one thing that could potentially, probably wouldn't make me sell all my Peloton, but make me lighten up my Peloton kind of core equity position if I feel that there's some issues with the supply chain, like Tonic, the company they own. That would be a potential huge issue for me. Is it still holding up? Let's see here what it's doing. PTON is holding up, guys. It's like close to 40. That's pretty strong considering
That is
the move pre-earnings. PayPal, guys, I don't own PayPal. I do own Square, but I don't not own PayPal for a reason, right? I don't own Salesforce, but I don't not own it for a reason. Salesforce is actually a company that if we can get through this virus, that people don't want me to say pandemic, if we can get through this virus,
you don't not own it for a reason? Wait a minute. So you do own it. That's a double negative.
I'm sorry. Well, I'm sorry. I don't own Salesforce.
There's not a reason that you don't own it.
Yes. Yeah. I'm not. I just don't have any edge when it comes to PayPal or Salesforce. I have been closely following data for Square, and the data that I follow on Square is really, really strong. I feel there's kind of been a cultural shift to Square Card, and I think that's going to come out as one of the big winners here over the next few years, and that's why I'm in Square. Nothing wrong with PayPal. I still have my puts. I still have my short position on Cake. I still have it on Ruth. I still have it on Dave and Buster's. I'll have to take a look. I'll have to reanalyze. Oh, here is that Brock Bickers with here, which is, I forgot. I was going to get back into here potentially. Shoot, did they have earnings today? Turtle Beach. I think Turtle Beach might have earnings tomorrow. So I doubled my money in Turtle Beach, and I have to give so much credit. One of our subscribers, Brock, I don't know if it was you, Brock Biggers 356, or someone else that initially kind of tweeted us or had a comment on them. But when I saw that comment, I've traded them in the past, Turtle Beach in the past, but it was kind of off my radar. And I'm so glad you got it back on my radar. I doubled my money on that stock, and I sold out this last week. I would consider getting back in for earnings, but I have to take a close look at my data. Oh, Sonos. Is Sonos today or tomorrow? Sonos is another one.
What, Sonos already happened?
Did that happen today? I don't see it. That must be tomorrow. I might spend some time on Sonos tonight too. Sonos and Roku.
Yeah, Sonos is tomorrow after market hours.
Stop. Yeah,
Drew, thanks for the comment on my NASCAR shirt. You know, I'm just a man of the people, man. I like to keep it real. So,
so Sonos already happened, and they dropped.
Sonos did? Okay, so I'm glad I kind of didn't do the research on that.
Oh no, yeah, Sonos was today after hours.
Yeah,
and they dropped.
They dropped.
How much are they down?
They're down 5% right now.
In this environment, that's nothing.
Yeah. Yeah, I might buy some Sonos after that.
Well, I mean, really, but like, yeah. Why though? Oh, yeah. Guys, I do have one I'm looking into right now. This is a little controversial. And they have earnings, perfect, I think, tomorrow. Ruger. Did they have earnings tomorrow, or was it today? Did I already miss them? I started studying Ruger. Like, you know, I used to do a lot of these arms trades. What are we going to call them? Guns trade. Like, what do you call them?
You need to find a better way to phrase that. You're going to get us kicked off of YouTube.
I used to trade those stocks quite a bit back during the last administration. We used to have real-time data that would be a great indicator of purchase data, and we would trade that constantly, and it worked out well for a couple of years. In fact, if Leon's watching, he'll remember when we were at Ticker Tags, we had such strong data. various words when they were used on Twitter at a higher frequency rate would be pretty closely correlated to people going out and making purchases of home defense, we'll call home defense products. And I started looking into some of my data again last night, and it was pretty appealing. And I think there could be a trade in Ruger. I want to say they report tomorrow. I haven't traded it. I'm not in it. I need to look into it more tonight. So now I was just saying I don't want to do anything for the next few days, except maybe have a fun talk about Elon.
This market. Now you did stop watching TV and stop watching the markets for at least 24 hours, which you needed a cleanse.
Almost, Dave. It's been almost a full week. Now I do technically have CNBC on right now, but the volume's been off all day. I don't look at it. I don't know what they're talking about. I needed a full-on cleanse. And like I told you last episode, I needed to almost meditate to see through the noise in this market right now, because the noise is so big. It's bigger than it's ever been before. And you got to be able to just cleanly see through the noise, regardless of what stock you're analyzing. All right, are they not? What? Oh, they should be starting any second.
This is their music, so it should be ready as soon as I'm ready when they are.
You know what I feel good about besides the Peloton trade today is I looked at all these other earnings trades today, and Etsy. I spent some time on Etsy last night, and the data was just mixed. And I was like, I'm going to let that one go. I'm glad I decided not to trade a lot of these others that are just not doing anything interesting. Oh my God, Twilio's up $32 right now, Dave. Jordan, are you in Twilio?
No.
You're not in Twilio?
I'm not in Twilio.
Wow. Oh, I love this. I love this. My Twilio is crushing it right now.
That is amazing. Yeah, they jumped from 122 to 150.
Oh, I don't even know how much I have. I felt like I lightened my position, but I still
definitely lightened my position. I may have sold all of it. I'm pretty sure I did sell it all.
You did? I'm gonna look at what I got. Okay, hold on.
Yeah, I sold it all.
You know, it gives me a heart attack when I check my portfolio and I miss the ticker. So I feel like something happened. I accidentally sold it, or maybe I got over leveraged and Ameritrade pulled it out of my account or something, right? No, I'm pretty low, 2,000 shares of Twilio, but still it's nice. I'm up, ready for this, guys? I'm up 84% in my Twilio. I'm up 117% in my Shopify. I'm up 182% in my DocuSign, 21% in my Fleer, 38% in my Win holding. I'm up 45% in Square and 41% in Teladoc. I'm up 58% just on my last Tesla trade alone. I'm up 52% in TTD, and I don't even know what that means. What is TTD? Do you remember that one?
No.
What is TTD?
Trade Desk, the advertising company.
I forgot I bought TTD.
Well, you might want to take a look at it.
I'm up 50,000 in TTD, guys.
They're down after hours. I wonder if they had an earnings event.
I'm up 70% in Restoration Hardware. 70%. That's $60,000. I could probably buy 4 Restoration Hardware sofas for $60,000. Right?
Maybe. Probably more like 3.
Maybe 3 or 4. I am up 52% in PLT. What is PLT? That
Plantronics, or what is it?
Am I still in Plantronics? This is insane. There's no way I'm still in Plantronics. What? I thought I sold that.
Oh, we have the conference call starting now.
Third quarter earnings conference call. At this time, all participants are in a listen-only mode.
Plantronics.
After the speaker,
I still own my Plantronics. I didn't realize I owned them. Dude.
To ask a question during the session, you will need to press star 1 on your telephone. Please be advised that today's conference may be recorded. If you require any further assistance, please press star 0. I would now like to hand the call over to your speaker today.
Chris, I'm going to send you the number so you can call in.
Relations, Peter. Okay. Sir, please go ahead.
Oh, sorry. Hi, this is Dave Hansen from
Peloton third quarter earnings conference call for our fiscal year ending June 30, 2020. Joining us today on the call to answer your questions are John Foley, our co-founder and CEO, William Lynch, our president, and Jill Woodworth, our CFO. A copy of today's shareholder letter is available on the investor relations section of our website at www.onepeloton.com and has been furnished to the SEC on Form 8-K. Before we begin, I would like to remind you that our comments and responses to your questions reflect management's views as of today only and will include statements related to our business that are forward-looking statements under federal securities law. Actual results may differ materially from those contained in or implied by these forward-looking statements due to risks and uncertainties associated with our business. For a discussion of the material risks and other important factors that could impact our actual results, please refer to our SEC filings and today's shareholder letter, both of which can be found on our website. During this call, we will discuss both GAAP and non-GAAP financial measures. A reconciliation of GAAP to non-GAAP financial measures is provided in today's shareholder letter. With that, I'll turn the call over to John, who will begin with a few opening remarks. John?
Good afternoon. Thank you for joining us to discuss our third quarter results. As a New York City-based company, we've seen firsthand the magnitude of the COVID-19 crisis, and we offer a heartfelt thank you to all of those working tirelessly on the front lines to battle this epidemic. Our top priority has been and continues to be the safety, health, and well-being of our employees, members, and the communities in which we operate. As detailed in our shareholder letter released this afternoon, we've made a number of significant operational changes in order to safely continue our service. Fitness routines yield significant benefits to overall physical and mental well-being, and we remain committed to serving our members throughout this difficult time. We obviously recognize that a tremendous number of businesses and their employees are facing extraordinary challenges at this time. Our hearts go out to all of those negatively impacted by this crisis across broad sections of the economy. As you might imagine, however, the shelter-in-place and work-from-home realities have created a meaningful tailwind for Peloton and the broader ongoing consumer shift towards at-home fitness experiences. While this tailwind is undeniably positive for our business financially, we are more proud of our member growth, the increased engagement of our members on our platforms, and the feedback we've received from our members about how Peloton has helped them maintain their physical and mental well-being in these difficult times. Specifically, we ended the quarter with over 886,000 connected fitness subscribers, representing 94% year-over-year growth. Member count is now over 2.6 million, inclusive of our 176,000 Peloton digital subscribers. Over the past year, we've seen steady gains in member engagement as we've expanded content verticals and launched new member experiences. With so many members now under stay-at-home orders, this quarter saw an even larger gain than expected. Our connected fitness subscribers logged 44.2 million workouts with us in the quarter, up from 18.0 million workouts in the same period last year, representing 145% year-over-year growth. On a subscriber basis, that is 17.7 average monthly workouts per connected fitness subscriber compared to 13.9 workouts in the same period last year. With this growth, the value proposition of our platform has never been stronger. This incredible engagement with our connected fitness products led to our lowest level of churn in 4 years. For the quarter, our average net monthly connected fitness churn was 0.46%. In addition, we now have over 176,000 digital subscribers, with growth attributed to improvements we have made to our fitness content and software features available on our digital app, our price change to $12.99 in December, and the extension to new platforms like Amazon Fire TV. Early in the COVID crisis, we extended the digital subscription free trial period from 30 days to 90 days, resulting in over 1.1 million downloads of Peloton Digital in the past 6 weeks. We were extremely proud to offer so many people free access to our incredible fitness content during this time. I am also proud of our financial performance this quarter, with revenue growing 66% year over year to $524.6 million. With strong revenue flow through and leverage against our fixed costs, we achieved our first adjusted EBITDA positive quarter as a public company in Q3, with an adjusted EBITDA margin of 4.5%. Over the past several weeks, we believe we are accelerating our market share gains of the $600 billion global fitness industry and increasing our lead as the largest and most scale-connected fitness platform in the world. We believe the current environment of social distancing and working from home is permanently influencing consumer behavior, driving more people to discover Peloton as the most engaging, entertaining, immersive, and motivating home platform for fitness and well-being. Our scale as a platform is a huge asset, but also presents some challenges. With tens of thousands of people on the leaderboard at a time and millions of members on the platform and growing rapidly, we continue to develop ways for our community to interact with each other in a more personal way. To that end, last week we launched Tags, a new social software feature that strengthens our network by leveraging the power of groups, making it easy to feel connected to others, even without existing connections on Peloton. Tags are a simple yet highly flexible way for members to express themselves, connect with others, and work out together. Members can create tags that represent their shared interests, their favorite sports team, college, charity, employer, geography, and more, or browse through the more than 50,000 tags that have been created by our community in just 1 week since its launch. Importantly, our members can now filter the in-class leaderboard by tag, taking a massive global leaderboard and making it instantly more intimate, personal, and motivating. Before turning it over to Jill, I want to mention a few additional milestones in Q3. On March 19th, we began broadcasting from our new flagship media compound, Peloton Studios, New York. Equipped with a state-of-the-art technology, our new 35,000 square foot facility has 4 studios under one roof, allowing us to film all fitness disciplines in one centralized location for the first time. When it opens to the public, Peloton Studios, New York will be a destination for our member community to come together. I'd also like to highlight that our music and legal teams achieved an important milestone in the third quarter, resolving the litigation with Downtown Music Publishing. Since then, Peloton has welcomed thousands of new music publishers to our platform, adding great new songs that our members love to our already industry-leading library. We also settled our patent infringement litigation with Flywheel, further strengthening our ability to protect our intellectual property. We have a strong patent portfolio, which we continue to vigorously defend.
Yes. Hold on one moment.
Lastly, I want to express my gratitude and appreciation to the entire Peloton team across field operations, member support, retail, content production, our instructors, our folks on the manufacturing lines, and all of our employees at our headquarters in New York City, London, Taiwan, and Plano, who have all played an important role in supporting our members' physical and mental well-being through this COVID crisis and beyond. I am definitely proud to work at Peloton, and I hope you are too.
Yes, it is done.
Now over to you, Jill.
Thanks, John. We generated total revenue of $524.6 million in Q3, representing 66% year-over-year growth, exceeding expectations across all geographies, driven by strong demand for our bike. On our last earnings call, said we would face a challenging comp in Q3, given that our tread launched in the same quarter last year. So we are especially pleased with the growth we achieved in the quarter. I also noted that guidance would more closely map to results moving forward as we gained more clarity on key areas of variability. With that said, we were pacing at the high end of guidance or better for all of our financial metrics and KPIs. But starting in the first week of March, we saw a spike in demand for our bike and tread due to COVID-19. The significant increase in sales spans all of our markets and has continued into May. On March 19th, we paused activities that require entering the home, including tread delivery, return pickup, and in-home servicing. We will resume these activities when it is safe for our employees, members, and communities. Gross margin for the quarter grew to 46.8%. Our connected fitness product gross margin was 45.3%, exceeding our expectations. This was due to a mix shift to bike deliveries, continued improvements in our product costs, helped by our acquisition of Tonic, and the greater than expected fixed cost leverage in logistics due to sales outperformance and the shift to threshold delivery. These efficiencies were partially offset by hazard pay for our warehouse and delivery employees. Subscription gross margin was 57.8%, and subscription contribution margin was 63.6%, exceeding expectations primarily due to fixed cost leverage. Total operating expense, excluding non-recurring litigation and settlement expenses of $49.3 million, was flat year over year as a percentage of total revenue. In mid-March, we paused all advertising in the majority of our markets, allowing us to see the benefits from many years of marketing investments in brand awareness and high customer satisfaction driving word-of-mouth referrals.
That's huge. That's what I was waiting for.
Gross margin.
Yes.
Operating expense leverage, inclusive of lower marketing spend for the quarter, our Q3 adjusted EBITDA was $23.5 million, representing an adjusted EBITDA margin of 4.5%.
Very
we have
rare
a strong
to have
balance sheet with over
positive EBITDA.
$1.4 billion of cash and cash equivalents, and additional liquidity in the form of an untapped $250 million credit facility, providing significant resources to take care of our employees and members during this time, while allowing us to continue to make investments in our platform to drive growth going forward. Moving on to guidance. For fiscal year 2020, we are raising our expected ending connected fitness subscriber range to 1.04 to 1.05 million versus our previous guidance of 920 to 930,000, representing 104% year-over-year growth at the midpoint.
I'm calling to actually
For
ask a question
Q4,
on
we expect
the conference
average
call for
net monthly
Peloton. I can give you the
connected
number.
fitness churn
Are you able to?
to be below 0.75%, reflecting recent trends and an expectation that we will revert to more normalized levels by the end of the quarter. In Q4, we expect revenue of $500 to $520 million, representing 128% year-over-year growth at the midpoint. For fiscal year 2020, we are raising revenue guidance to $1.72 to $1.74 billion, representing 89% year-over-year growth at the midpoint versus previous fiscal 2020 revenue guidance of $1.53 to $1.55 billion. We entered Q4 with a backlog of bike deliveries in all geographies, and sales continued to surpass expectations into May. The unexpected sharp increase in sales has created an imbalance of supply and demand, unfortunately causing elongated order-to-delivery windows for our customers. While we are working to accelerate the supply of bikes and incurring higher costs in order to expedite shipments, we do not expect to materially improve order-to-delivery windows in Q4. Moving on to margin. For Q4, we expect gross margin of 42.5 to 43.5%, and a connected fitness product gross margin of 40 to 41%. As previously mentioned, this decline reflects cost to expedite product shipments and the continuation of hazard pay for warehouse and delivery employees. The decline in connected fitness product gross margin is partially offset by a mix shift to bike deliveries. Our Q4 guidance assumes we continue to pause tread deliveries through the end of the quarter. If we resume in-home assembly sooner, that will provide upside to our connected fitness subscriber count and revenue expectations. put modest pressure on connected fitness product gross margin, and leave adjusted EBITDA unchanged. For Q4, we expect a subscription contribution margin of 63 to 64%. Year-over-year improvements in subscription gross margin and subscription contribution margin are driven primarily by continued leveraging of fixed costs of content production. We expect Q4 adjusted EBITDA of $55 to $65 million, representing an adjusted EBITDA margin of 11.8% at the midpoint. This means that for fiscal year 2020, we expect to earn 30 to 40 million of adjusted EBITDA and an adjusted EBITDA margin of 2% at the midpoint. Our expected Q4 profitability on an adjusted EBITDA basis is the result of notable and continued high demand for our bikes in all of our global markets, a robust gross profit margin profile, albeit with additional shipping and COVID-related costs, significant reduction to sales and marketing expense due to limited media spend, partially offset by the costs associated with the extension of our digital free trial period to 90 days. And lastly, significant leverage across our fixed expense base. While we are not at this time able to provide financial guidance for fiscal 21, we understand many of you are looking for help with modeling beyond the current fiscal year. We previously said we expected to achieve profitability in fiscal 2023, a goal we have achieved far sooner than originally forecast. The extraordinary events taking place over the past 2 months have measurably expanded our market opportunity and accelerated the ongoing shift to connected fitness. Our fiscal year 2020 profitability outlook demonstrates the strength of our financial model when scale and leverage are achieved. However, our underlying strategy is unchanged. We plan to continue to prioritize connected fitness subscriber growth and invest aggressively behind new products, software, fitness programming, and international growth. As John noted earlier, we believe COVID-19 will have a long-term impact on the fitness industry, with many people likely not returning soon or at all to gyms or boutique fitness locations. With over 90 million gym memberships across our 4 current global markets, the US, UK, Canada, and Germany, and only 2.6 million members today, we continue to see a long runway for growth in the coming quarters and years. We expect to provide fiscal 21 guidance in the fall when we report Q4. I will now turn it over to the operator to take your questions.
Certainly, ladies and gentlemen, if you have a question at this time, please press star then 1 on your touchtone telephone. If your question has been answered and you'd like to remove yourself from the queue, please press the pound key. Our first question comes from the line of Doug Anmuth from JP Morgan. Your question, please.
Great, thanks for taking the questions. First, we're just hoping you could provide some thoughts on how much of the sales lift you think was driven by pull forward of demand versus what might be a more durable change to the demand for.
You knew this was coming, right? It's the first question.
And second, you mentioned
hope they answer well.
Elongated wait times on bikes. Can you just talk about where you see kind of the bottlenecks, if that comes more in?
Please don't answer like Netflix did.
or perhaps both. Thanks.
Great. Hi, Doug. It's Jill. I'll take the first question and then hand it over to William to address your second question around supply chain and logistics. Great question. As you can imagine, this is a very important topic for us as a management team to understand as we resource plan across the organization for the next several quarters. I think, as I said in the prepared remarks, we were tracking to the high end of guidance until the first week of March, when we saw the spike in demand for our products, which means Q3 outperformance on sales in connected fitness subscribers as well, above the top end of our financial guidance was COVID related. In short, though, we believe that we are seeing a significant expansion in our serviceable addressable market. We define our serviceable addressable market as consumers who have purchase intent for our current products at our current price point. A year ago, we measured our SAM at 14 million connected fitness products. With purchase intent largely following our growth in brand awareness prior to COVID, we believe we already had significant expansion of our SAM, given the progress we've made across our geographies in growing our brand awareness. We are in constant dialogue too with our members, and like many companies are working very hard to understand the impact of COVID-19. So while it's a little early to draw some definitive conclusions, we have done some recent research on purchase intent of our post-COVID buyers, and we attribute a large percentage of our increase in sales as an expansion of our SAM, as there are a large percentage of people who previously did not indicate purchase intent of a Peloton bike prior to COVID, which we view as a significant expansion of our market opportunity. Further, I would say we continue to see persistent and sustained sales of our bike across all regions today, even with the elongated order to delivery windows. And most exciting to us is that our newest buyers are engaging even more with our products than any new buyer cohort has done, and engaging more than some of our older cohorts. And we believe new at-home routines are going to continue to stay intact even when COVID has passed. So we're very excited about our growth profile moving forward. And we think that a lot of this is just validating our long-held view that the Peloton experience is like no other. And once people try it for themselves, they get converted. So we're very excited about the expansion of our market.
Hey, Doug, thanks. It's William Lynch. Thanks for the question. So in terms of the constraint on the supply chain, it's bike inventory. With the way we first of all, we aim to get our products to members as quickly as possible. Typically, we're on a 7 to 9 day order to delivery. And we perform extremely well in that regard. In this case, we plan inventory levels based on sales forecasts out number of days, any X number of days. Q4 is a seasonally low period for us historically. And so we planned out the number of days we wanted to carry with the sales acceleration that hit and created the imbalance that Jill referenced in the initial statement. And so the good news is we've got an incredible supply chain team, one of the best in the industry. And so we've worked quickly to expand within our existing facilities. And if you just look at what we're producing today versus what we were producing in early March, we've been able to more than double the output. And then as we look to the future, to the point on sort of structural changes and our growth going forward and move to connected fitness, as we'd mentioned, we are investing in a new factory. This is part of the Tonic acquisition, a big new factory in Tainan in an area called Shinji, and that'll come online in December and will help fulfill holiday demand. It'll actually help production for holiday and then beyond. And so we feel like we're really well positioned. It's worth noting that in terms of supply, the guidance that we provided for Q4, we feel very confident and comfortable that we have supply against that guidance. And we're doing everything we can, short, mid, long term, to ensure we have supply capacity going forward. But it is absolutely bike inventory.
Great. Thank you both. Thank you. And we also ask that you please limit yourself to one question and one follow-up. You may get back in the queue as time allows. Our next question comes from the line of Justin Post from Bank of America. Your question, please.
Great. Thank you. Obviously, unusual time. Looks like you're handling demand as well as you can. I was just wondering, on the product development side, I know this new studio's opened and it's hard to tell what impact, but maybe you could talk about when things get back to normal, how that's going to help with the content for Peloton. And then secondly, you already got to start thinking about next year. How is the pipeline on new products right now? And has there been any impact on product development from
talk about any of the products that you've heard about, Chris?
Yeah, I'll take, Justin, this is John Foley. Thanks for calling. I will take the new product one, and then William, you want to take the content? With respect to new products, we did tease in the last couple quarters that we had some innovation and some new things that we were going to bring to market this year. You can imagine, like every other company in the world, that the COVID crisis has forced us to rethink rolling out anything new. Obviously, our retail stores are closed right now. William alluded to the realities of the supply chain and what we're working through with our current product portfolio. So we did have to rethink the timing of new product launches. It's unfortunate, but real. In a good way, in an exciting way, it feels like, or we do at this point have a significant backlog of innovation and R&D that we are looking forward to bringing to market, as you can imagine. So a lot of that stuff has been taking place over the last year or two, continues to take place even in a shelter-in-place reality. And so we do have a backlog, and we will bring those products and those innovations to market when we can. We're obviously not going to announce the timing today, but we are very excited about it, and it's going to be impressive, I believe.
And then, Justin, to your point on the content side, that studio sets us up to do exactly what we expressed, both in terms of to investors, but most important to our members, which is expand the types of content we offer and increasingly add more and more utility to the Peloton membership, which is why in some large part we're seeing the engagement that Jill mentioned, engagement growth, and Jill and John mentioned in the beginning. Just in the last few months, we've launched new fitness verticals like Fit Family, which was actually in development before COVID started and getting incredible engagement, 200,000 classes and workouts. That's something that our content team put together so the whole family can work out together, and it's super topical during this time where everyone's sheltering in place. Things like Dance Cardio, which has had close to 650,000 classes, and we just launched that a month ago. And so these new studios will continue to allow us to expand the fitness disciplines. It's becoming more and more important. We've seen adoption of non-cycling fitness classes has exploded. So things like strength training, which is massively strategic to us. We believe that cardio and strength are the two pillars of fitness, and so we feel great about cardio with our bike line and our tread line. And then strength is something that is a super fast part of a growing part of the portfolio, and that we will continue to invest in. So those studios coming online will allow us to just keep expanding that content.
Great, thank you.
Thank you. Our next question comes from the line of Edward Yruma from KeyBanc Capital Markets. Your question, please.
Hey, good afternoon. Thanks for taking the question. And that Robin live from her home ride was fantastic. Two quick ones for me, I guess. First, on marketing longer term, given the kind of power of word of mouth here, any rethink to kind of how long it'll take for you to achieve kind of the longer term marketing objectives from a leverage perspective, kind of current period notwithstanding? And two, are you seeing any changes in underwriting standards from your finance partner? Thank you.
Yeah, I will take the first. I'll actually take both questions, but I'll answer the second question first. And the answer is no, we have not changed any standards. Our partners have not changed any underwriting standards to our knowledge. We feel very good. We've had very consistent financing penetration over the last couple of months. And as you can imagine, I think we've talked about this before. We've had to date extremely low default rates and a fairly healthy credit profile of a lot of those that participate in our financing program. So we feel very good about that. And again, the consistency that we've seen on financing penetration, we think helps support that. The second question on sales and marketing spend, I'll kick it off and then maybe turn it to William as well to add anything that I've missed. But 100%, this has been a really interesting time for us where we've reduced media spend because of the organic demand that we've had. And we're continuing to pause that media spend in most of our markets. And what's been interesting is to see the years of investments that we put into building our brand and building product awareness and the investments that we've made to create the best experience, member experience, and customer journey that we can. So we're seeing, really great word of mouth. I can say that as our membership gets larger, what's interesting is with the engagement growing, the base getting larger, we do think we're going to see some rival effect of word of mouth becoming increasingly more important. It does lead us to believe, especially given the payoff we're seeing today in terms of, again, the increased sales, despite having zero marketing media dollars deployed. We do think
zero marketing.
We should expect to see much more marketing efficiency than we originally forecast. I'll just say, with that said, we're still in the very early innings of growth as a platform, and we're going to continue to smartly grow sales and marketing spend so that we stay top of mind with consumers.
I might up my position tomorrow.
Really?
Yeah, nothing else to add to that.
Jordan, you will, right?
Obviously, the word of mouth point, Ed, is it's an astute point, and we've seen word of mouth grow. We do a post-purchase survey to ask our new buyers where they first heard about Peloton and what's influencing their decision, and we've seen word of mouth grow during this COVID period as a percent of what new buyers cited as influencing the purchase decision faster than we've ever seen it. So clearly, this experience, it's unmatched. The way we treat members, the investments we put towards things like our delivery and member experience, post-purchase service, we'd hoped those would pay off. We believe they would, and we're seeing that in terms of a marketing viral effect.
Great, thanks so much.
Thank you. Our next question comes from the line of Ron Josey from JMP Securities. Your question, please.
Great. Thanks for taking the question and amazing numbers. So I wanted to ask John maybe a bigger question, just given your commentary around social distancing and obviously the natural demand we're seeing. Just can you give us some insights on how you're thinking about the retail strategy? I think all stores and showrooms are still closed, and you're still seeing significant demand. And also, if there's any update on what you're seeing from digital subscribers potentially converting over into connected fitness subs. Thank you.
Great. Actually, William, do you want to take the question on retail, and then John can take the next question?
I was answering the question on mute, so I'm glad you interrupted.
Oh, got it. Sorry. No, I thought we might have lost you, John.
No. Let me weigh in real quick, and William can definitely provide more color on probably both answers. But Ron, with respect to the retail stores, as you know, we have close to 100 retail stores across 4 different countries. And the good thing about our retail stores, we love them. We love what they do. We love people being able to try the products. We look forward to launching products. They're kind of a hub for their local community. But as you point out, we don't necessarily need them, and our sales have been strong without them for the last few weeks, a couple months. But what we're excited about when you think about reopening them is that we don't have to be on the bleeding edge, unlike other retailers and studios, for that matter, who their entire business depends on getting back open. We are going to be able to be a little bit more cautious and call it the trailing edge of opening back up because our retail folks are actually adding value from home, helping out with member experience and inside sales. But we are committed to retail. We love retail. In this environment, you could actually see us with some retail struggling 12 months from now, having even better leases, better locations. And so retail has been and will continue to be an important part of our strategy and our multi-channel marketing and the efficiency of how we go to market and we embrace or we engage with our consumers. And then the second thing around digital conversion, it's obviously too early to say on how the 1.1 million trialers are going to convert because they haven't come up to the 90-day gate where they would have to decide to become a digital subscriber. But you can imagine that with the engagement we're seeing from those people and the quality of the content that as Justin brought up, is going to continue to get better as Peloton Studios New York comes online, and next year as Peloton Studios London comes online. So more content, more verticals, more ways to engage with that content. we expect that a lot of those 1.1 million will either become a digital subscriber or eventually become a connected fitness purchaser, which is obviously the golden goose for our business. And but we would welcome both of those. But at this point, we don't have any data on the conversion.
Great, thank you.
Thank you. Our next question comes from the line of Jason Helfstein from Oppenheimer. Your question, please.
Hi, it's Anthony on for Jason. Given what you've seen the past 6 weeks around the digital-only subscription, do you believe that can be an attractive LTV business if new users don't convert to connected fitness subs, but remain digital-only after the promotional period expires?
Yeah, I'll take that, and Jill and William, you guys can weigh in. We haven't seen the type of explosive unit economics in that business that would lead us to believe that it's going to be a meaningful driver of the bottom line for Peloton in the next couple of years. That said, we've seen a great increase in LTV and a increase in LTV to CAC ratio with our lower price going to $12.99. Some of the new engagement touch points like Android TV. And so we love the business. We've said this and we continue to do it is kind of run it at unit economic break even and just try to get as many people on the platform as possible, because we do like introducing people to our content before and letting them trial it before they buy. But right now, mostly we're thinking about it as lead gen for our connected fitness platforms as we execute on our better best strategy, and we potentially have lower price points in our different lines. You could see more of those digital trialers and more of those digital subscribers engaging and buying our products. So it is a beautiful wheelhouse or virtual flywheel at this point, but we still aren't saying that it's going to be a massive standalone business yet. Does that answer your question? Yeah.
Thank you. Our next question comes from the line of James Hardiman from Wedbush Securities. Your question, please.
Good afternoon. What's your strategy to keep the connected fitness turned down once the gyms actually reopen? It sounds like it's safe to say that the upside versus your numbers for 3Q and potentially 4Q are largely people that didn't have access to their gyms. How do you keep those people in the fold? Obviously, it helps if they just bought a $2,200 piece of equipment. But is that sort of when we should think about sales and marketing resuming as gyms begin to reopen and there's increasing options for people looking to stay in shape?
Yeah, maybe I'll start and obviously John chime in. But I think what's been the most encouraging aspect of some of the data that we've collected from our post-COVID-19 buyers is that they're incredibly engaged with our product, and no doubt a large percentage of them had fitness routines that they can no longer do. But we've heard countless stories of a lot of our newest members who, again, did not have purchase intent for the Peloton bike prior to COVID-19, who are complete converts, right? I think so many people are now able to experience the immersiveness and entertainment and software features and community. And we believe so strongly in the value proposition of our product that we think that we are permanently changing the behavior of many of these new members. And again, I think, just based on, our own research, we do think it'll be a slow climb, for people to get comfortable in environments such as gyms and boutiques. And so I think we feel very confident that we're going to be able to keep these members engaged. And I think William pointed out earlier as well, when we think about our sole aim at this company, it is to drive engagement of our members, and everything we do is to drive engagement. So the better we can make our software features, like tags, the better we can, the more content we're creating, the more fitness verticals, and we're going to continue to do that over the next several months. I think we're going to be able to convert and continue to attract a lot of our newest members who we think might be hesitant to go back to the gym anytime soon.
Great. And then sort of a follow-up as we think about, reopening the economy. I forget who made the comment in the prepared remarks about not being able to go into people's homes, particularly to bring treadmills, is actually holding back connected subscriber growth. Now, obviously, it takes longer to deliver if you're going into people's homes, which would seem to suggest that the delivery function is not a bottleneck in any way. Can you just talk us through how to think about when we get back to sort of a normal delivery process, how that actually helps the throughput?
William, but I think the rate limiting factor for Q4 is really supply chain. It is not delivery capacity. But William, maybe you could walk through some of the efficiencies that we've gained over the last couple of months and tread delivery as well.
Yeah, sure. It's important to note that Tread was ahead before we had to pause deliveries. Tread was tracking ahead of our forecasts, so we felt great about Tread and just our ability to gain traction in what's still a relatively new category for Peloton. And as I mentioned earlier, in terms of cardio, we feel like Tread's an important beachhead for us. So we were definitely tracking ahead. We were able to take, with the explosion in bike demand, we were able to take some of our field ops, our incredible field ops folks, and shift them over from what would have been tread deliveries to bike deliveries. And so it's one of the many benefits of our vertical model, and we actually have seen this across the business. We do a lot of things ourselves here at Peloton, and so whether it's retail and shifting some of those retail folks over into inside sales as we closed the stores to be able to take phone calls and all the inbound demand and orders. Our retail folks led by Jen Parker and her amazing team also helped on the member experience side, answer phones. The macro point is our vertical model really gives us flexibility in our great management team. To your specific question, that's what we were able to do, and that's the efficiencies we saw. We were able to take the field ops capacity we would have put to tread, and we were able to vector that into this incredible spike and growth in bike demand.
The only thing I would add, and I mentioned this earlier, that if we are able to resume tread before the end of the quarter, we will 100% have the delivery capacity for that. But obviously the current guidance assumes we are not resuming tread deliveries before the end of Q4.
More upside.
Thank you.
Thank you. Our next question comes from the line of Heath Terry from Goldman Sachs. Your question, please.
Great, thanks. I just wanted to dig a little bit deeper into the supply chain discussion. If I look at the backlog that you had reported on the balance sheet in Q for the March quarter, it would appear that you had about 95,000 bikes on order at that point. And I compare that to the roughly 165,000 that are implied in the guidance for the June quarter. I've got to imagine you guys are going to sell a lot more, and probably already have just in the month of April, a lot more than 65 or 70,000 bikes. Is the guidance for Q2 an indication of sort of what that 165, 170,000 where the supply chain sits now, or sort of where the capacity of the supply chain sits now? And could you give us a sense of sort of all of these efforts that you have to expand the capacity of the supply chain, sort of where supply chain capacity could be in September, in December, and particularly, in December, given that you won't necessarily have the ability to pre-build the way you normally would ahead of a typical holiday season?
Guys, this was my question. This was literally exactly my question.
Ability to deliver.
Beautiful.
The supply chain's capacity to deliver.
Thank you, Goldman.
Over the next 6
I did one thing right.
I just want to make a couple points of clarification, and then I think William can do a deeper dive for you on what we're doing from a supply chain perspective. I think I've said in the past that it's hard to look at our inventory and get an accurate picture of how many bikes, right, we have available for sale. And as you can imagine, order to delivery times vary significantly across the different markets. It depends on kind of where we're seeing certain spikes in demand. And as you know, we have 2.5 dozen warehouses across the country, and now warehouses in Germany and the UK and Canada. So looking, and there's tread inventory there. So I wouldn't necessarily look at inventory.
I wasn't looking at inventory. I was looking at the I was looking at your deferred revenue line.
Yeah, and so on deferred revenue, yes, we 100% entered Q4 with a pretty decent backlog, and then remember, any sales that are occurring in Q4 are also going to be a backlog for fiscal year 21. So with that, I don't know if, William, you want to address some of the specifics around what we're doing in supply chain, but it definitely is we feel what I will say is we feel very good about the sales and subscriber estimates that we're giving for Q4, that those we feel very confident we can deliver on from a supply chain perspective.
Sure. Yeah, I'll just add, Keith. We've done a lot to de-risk the supply chain and support this growth, including just where we put our manufacturing. We have two terrific manufacturers in Tonic, who is now, as you know, last fall we acquired Magtonic and is now part of Peloton, and then Rexon, who is a third-party manufacturer also in Taiwan. And so we're dual sourced on bike and most of the major components. So that's de-risked our supply chain a lot on the manufacturing side. As well on the delivery side, we're able to, we've got great 3PL delivery providers. So in addition to our own field ops team, we've got XPO and we've got JB Hunt. And so we're able to flex volume there. And as we think mid to long term, we are a growth company, and you mentioned holiday. We are coming online with a new factory. We've made significant CapEx in that factory. We saw it coming. We saw this growth coming. Not in this COVID period, but in terms of our mid to long term growth. And so we've got that new factory coming online. I'm not going to talk about unit capacity, but that is a substantial addition to our ability to manufacture connected fitness equipment. It's both bike and tread out of that new factory. So
huge.
We feel like we're going to be able to support the growth in the business. And that's true across areas like member experience, where we've been scaling up, and Brad Olson and that team has been able to service members in a terrific way out of our Plano HQ too. So we're comfortable.
When you say comfortable, William, I mean, is that a suggestion that you don't feel like like you're going to be able to get to a point by the holiday season where you feel like supply chain capacity is not a limitation of growth?
We do, yeah. We're not giving guidance, and obviously demand's been a lot harder, Heath. In this, if you look at our forecast variability, we're pretty tight. We had been. I don't think anyone could have expected this period we're in, as you fully realize. As we think about, the X factor is sort of what does the baseline look like coming out of this, and so we're not going to give guidance. But I think Jill articulated our view, which is we believe that this whole thing has accelerated a move to connected fitness. We're obviously feel great about the business mid to long term, and so we feel like we've got plans in place to support our growth.
Great. All right, I'll leave it at that. Thank you both.
Strong. Good answer.
Thank you. Our next question comes from the line of Jonathan Kump from Baird.
They're not giving them anything negative. Not one negative piece on this call.
I wanted to ask about
one of the commenters
around marketing
was talking about how they seem like a Robin Hood type company because their answers are like dialed in, and they're
when you shorten the order to delivery lead time.
Very true.
Are you marketing back on? Kind of any additional thoughts on the levels we should expect that, and even some of the tactics you're planning?
Yeah. So in Q4, the assumption right now is the majority of our media spend is turned off in most of our markets. Obviously, there's still very nascent markets for
God,
us.
I love that.
Like Germany, where we're still in the very early stages of brand building. But predominantly for the U.S. and UK, we are turning off the majority of our media spend, which I think we've said in the past has been roughly, call it half of our cost structure in sales and marketing. And so in terms of the one other thing I would point out is we do have a slight offset to that in Q4, which is the cost that it was required for the 90-day free trial. So those 1.1 million members streaming and music costs, that is a slight offset to sales and marketing. So the reduction in sales and marketing and OpEx, there is an offset to all lost media spend. But yeah, I think, William, if you want to mention when we might think about turning that media on over the next several months. But for the Q4, just so you know, it's assumed in our model through the end of Q4 for sure with the elongated order to delivery.
Yeah, as Jill noted, we feel like these investments in creating awareness around Peloton and new products is an asset for us, and we think we're reaping the benefits of all this awareness building and our leadership in connected fitness now in a time where we're off. You could envision, John talked about the innovation pipeline and new products. You can envision, substantial marketing going behind that in future quarters. Again, we're not going to announce anything, but we feel good about that. As Jill noted, we're still on in Germany, where we feel like we're as you know, we just launched Germany. We're still on in TV and digital marketing activities and other marketing channels to create awareness. So that's how we think about it. We will come back on with marketing. We will find efficiency, as Jill noted, as we get into 2021 and beyond. We don't think we'll be off forever, and we're going to invest behind new products and new geos to continue to lead in connected fitness.
Okay, great. And maybe just one follow-up then on Jill, the study that you mentioned of new connected fitness customers who weren't previously considering purchase, as well as the 1.1 million who downloaded the app for free. Any more details on the characteristics of those customers, either demographics or what their fitness routines were previously? Just any more insight on those two bases of new customers potentially?
Yes, no, that's a really great question. I'm glad you brought it up. In terms of the post-COVID buyers specifically, one of the most notable changes in demographics is that the cohort of age under 35 has significantly grown. And even before that, I know we've previously said in the past that our fastest growing demographics are those that make under 75,000 and those that are under 35. We've seen a huge acceleration of that lower age group, and we've seen very consistent household income data over the last, call it, couple of quarters. So we're really encouraged by that. Our average age of our customer is going down pretty significantly. And I would also say, again, back to the engagement stats, which we think is always the best leading indicator, is that our most recent buyers are working out with us more than any other new cohort that we've seen. Obviously, there's the shelter in place that is probably driving some of that engagement, but we're very encouraged by that.
It's not too late for you to buy, Dave.
Thank you.
Tomorrow could be a huge day on this one.
Final question for today comes from the line of Youssef Squali from SunTrust. Your question,
killing it. They're killing this call.
Thank you very much. Two quick ones. The first one is just a quick clarification on new products. Does what's happening with COVID ultimately delay or accelerate the potential rollout of a lower price tread, as you guys have talked about earlier, just considering some of the issues you've had with the heavy kind of one that you're selling right now? And John, so congrats obviously on hitting profitability. That's a huge milestone. But with a very comfortable cash on the balance sheet and profitability, can you just speak to your capital allocation? Has has COVID changed any of your thinking around maybe M&A, maybe international expansion, doing it a little faster than initially anticipated? Any color there would be great. Thanks.
Yeah, it's a good question. We are absolutely 100% committed to having the best treadmill at a lower price. We've talked about that a lot. We were committed last quarter, and the previous quarter we're more committed today. Personally, I love that experience, that boot camp, cross training, circuit workout, on the tread, off the tread, strength training program that a boot camp and a Peloton tread offers, and that Peloton tread current owners love. And bringing that at a more affordable price point is a massive priority for our entire team. Again, this COVID world has forced us to relook at how and when we launch products this year, or next, or whenever. But we remain 100% committed to it.
Sounds like this year. Didn't that sound like this year, guys?
And owning
you let it slip.
Category globally. That is a high priority.
That was a slip.
I know it's a high priority for you guys, or for your investors. We are not a stationary bike company. I know it looks like that right now because we've had to pull back and just deliver bikes for the past few weeks. But please don't take that as anything around our focus or the importance of the tread category for Peloton. It remains a super high priority, and we're very excited about that lower priced product in that category. The second question was around our balance sheet and profitability, and how we think about growth and investing. At this point, Yosef, I can't say we're going to change much about our strategy. We've been pretty aggressive with growth. We're going into another sixth year of triple-digit growth on the subscriber growth, and we're very proud of that. And we are proud of our balance sheet. We think it could become strategic. With respect to M&A, unfortunately, we don't see anything awesome that would really change the trajectory of what we're doing. So we're our first, second, and third priority are organic growth. We have a great M&A team, and we're looking at smaller things that might accelerate one or two things we're doing. But for the most part, M&A doesn't look like it's going to be a big part of our next few quarters, or maybe even a couple of years. But we do like our balance sheet. It lets us sleep well. The profitability, you're right, from my perspective, allows investors to start to see the power of our model. So more than anything, we've been talking about the power of that. We've been talking about how Peloton is one of the few companies where growth versus profitability is not a trade-off. Obviously, you just saw that. I think you'll continue to see that. And so we aren't changing anything. COVID is changing the operations of everyone working from home, including our teams, and shutting down our stores and having to do creative stuff on the content side. So there's operational changes we've had to make, but strategically we're still on track. We will enter new markets, to your point, and new international markets, to your point, in the coming years. We will bring new products to market, but all of it has been the same strategy we've been executing against for the past couple of years.
Great. Thanks, John.
Yeah.
Thank you. This does conclude the question and answer session of today's program. I'd like to hand the program back to John Foley for any further remarks.
Yeah, so in closing, I did want to loop back on the macro here coming off of Q3 and Q4. Like everyone, with respect to COVID-19, we are hoping for a speedy recovery back to normal. We are pulling for society. We're rooting for society. We're pulling for science. We're pulling for New York City, by the way, where a lot of us live. On a personal note, I never realized how social I am. I'm literally can't wait to go to a buzzy, fun, packed New York City restaurant with good friends in the not too distant future, God willing. So we want to get back to normal like everybody. But with that said, I want to talk about Peloton's future outlook and whether or not you want to own our stock.
More future
We
outlook
believe
and
that
whether you want to
Peloton
own the
is
stock?
future of fitness, independent of when we get back to normal.
Okay, you can order just
I
what we
must
normally.
point out that, like I just said, we are looking at our sixth consecutive year of growing our subscriber count by more than 100%. 6 years of triple-digit growth would hopefully lead you to believe that Peloton is not a COVID story. Instead, we believe Peloton is the future of fitness because we offer better experiences at better locations, on better hardware, with better instructors, at a dramatically better value on a per workout basis. And you're going to hear more about that. For those of you who don't see the value as part of what we offer, we're releasing a value calculator in the next couple weeks, an updated value calculator on our website. I encourage you to play with it yourself to see when you're working out close to 18 times a month, what type of value you're getting vis-a-vis other options in the marketplace, boutique fitness or high-end gyms or even value gyms on a per workout basis. But we are a better value today, and with increasing engagement, I think I'm going to remind everyone in Q2 you saw increasing engagement, in Q3 we just talked about the increasing engagement, and with more affordable products over time, we believe that Peloton will always be the best value in fitness. Better experiences at a better value that is COVID-proof, that is recession-proof, and that is 100% where the entire Peloton team is focused. So speaking of our team, one last thank you to the entire Peloton team for another fantastic quarter of delighting our members and outperforming expectations. Good night, everybody. Thank you for tuning in.
Mic drop. Yeah. I love it. And no, $1 Million Millionaire, I don't want this to end ever. We have been, what you guys don't see is, this is me, Jordan, and Dave. This is our life every day, every night, going back as far as we can remember. This is what we do. We live for these moments, but how cool, guys, how cool is it that we get to share this now? I love this format with like this world, the people that are investing with us, going through it with us, the ups and downs. How cool is the win today? I'm sorry, Dave. I'm sorry. I wanted you to win with us. But like, hey, how cool is it
It's not too late. And the thing is, after hearing that, you didn't convince me, Chris, but after hearing that CEO at the end say, oh, by the way, now that the questions are over, I just have to say, if you you really need to buy this stock. You never hear a CEO, or I don't know if that was a CFO or who that was, but you never hear them say, just one more thing. CEO. If you aren't in, he actually said, if you're not in PTON, you're messing up. You need to be in this stock for the next 6 years. You've never seen a company that does 5 years of 100% year-over-year growth, year after year. We're doing it again. We're not a COVID story. We're going in for the long term. We are the future. I've never heard a CEO.
He's kind of Steve Jobs-ish. Doesn't he? A little Steve Jobs-ish?
He kind of is. It kind of reminds me of when Steve Jobs would go off the rails. Unlike Elon, when he goes off the rails, their marketing department is like, oh no, what are we in for? The compliance team is like, okay, hitting like leaving the room so they don't hear it. He was composed, he was professional, but he basically said, this is a stock that you want to own. I might have to buy and own this stock for
Dave.
This might be a new long-term hold for me.
Okay, can I ask you something? I'm saying this. Could you just buy some right? I'm really worried. Tomorrow morning, I think this thing could run big. I'm actually shocked it's not up more. I think
it's up 11% in after hours. I don't
Dave,
think
I think listen, I've listened to, you're gonna say I'm lying. I've listened to probably 10,000 of these calls. and what I'm always thinking about is, I know, me and Jordan have spent a lot of time with hedge fund managers and with sell side. And we know how they think. We know what they're looking for. And my gut right now is that was a superb call that is going to result in tremendous upgrades on the sell side. And I think funds I think what's going to happen is in meetings tomorrow morning, funds going to be like, let's go. They're going to treat this like an Amazon, like an Apple. They're going to treat it like a Lululemon, the next Lululemon. They're going to see the upside, guys. This could be a big mover this next year or two. God, Dave, I would love for you to get in just get in half right now, Dave. I don't want you waiting. If this thing runs in the morning, you're not going to get in. I know you, and you're going to be like, I'll wait for a big pullback. Get in right now.
I feel like it already made its big move. It's up 10%.
Dave,
I don't see it going
now.
up another 10% in the morning. Do you? 20%?
You could do it. I could see this in the mid-40s tomorrow. I could see it happening. I'm not saying it's going to happen, but I could see it potentially happening, and it wouldn't shock me at all. Because honestly, Dave, that was a spectacular call. It was so poised. They answered every question right. They gave the sell side and the buy side nothing. They gave them nothing to go negative on. I see nothing to go negative on. Jordan, you see anything negative?
No, it was awesome. It was awesome.
Awesome.
All right. How many shares should I buy?
Just get something. Get in there, because I'm thinking, God, I might keep my options until midday. Now, I usually sell them about 30 minutes to an hour into market, but I might let them run to midday and maybe sell half tomorrow, and the other half I could even keep to Friday. It's a little risky because who knows what the bigger market's going to do. But I wouldn't be shocked to see this in the low 50s. Maybe even, it's possible is all I'm saying. Who knows? You can never predict these things, guys. You can never predict them. But man, what more could you ask for? What more can you ask for? And what have we seen the last few weeks when we have a big winner? The big winners continue to run.
The big winners get rewarded. People go in and buy these stocks.
Yeah. They continue to run. Yeah.
As I was listening, and you saw the chart continue to tick up as the CEO is continuing to talk. And these questions were actually good questions being asked and solid answers along the way.
Yeah.
It's rare to hear a call that goes that well.
Yeah.
Wow. Okay, so it's always impossible to find the after hours trading on Schwab.
You remember? Oh, you're on Schwab. Schwab. Yeah.
I can go to the stock page, and then here it goes, extended hours, and I have to agree to a bunch of.
We just broke a record for our longest show ever, by the way. Longest show ever, and I gotta say,
we're still under 3 hours. We've gone 3 before, I think.
I want to say to everyone watching right now, and by the way, I love literally every comment is the greatest entertainment I've ever seen, guys. I love every one of you. Thanks for being with us through this. This would not be half as fun if we didn't have the community with us, and we're going to be doing this for years. We're not going anywhere. This is by the way, this is such an opportunity. This whole thing that we're in right now with the volatility and with the pricing of some of these stocks, you absolutely must stay with us, guys. It's going to be so much fun over the next few months. What else do we have in our life? Anyway, we can't leave our house.
I also agree with this comment, though. It just pumped up 11% during a conference call. My gut tells me this is not the time to buy it. I should wait.
So get a little. I just want to know. Listen, here's the thing. You know what's good. I want to be able to call you and text you about Peloton and not have you be pissed every time I mention PTON because you didn't get in. So get 20%.
That's how it's been this whole time. I basically, I don't care. Peloton's not one.
Get 20% of what you want to buy tomorrow. Get 25% of what you want to buy tomorrow. 30. But
all right.
Get in a little. Let's just put a little bit. Who cares if it goes down $3-4? I mean, between now and then, I think the risk is on the upside more than the downside here. I don't know, because listen, people are going to digest this. Listen, Peloton is an institutional type of company, okay? Like, this is a company that institutions are going to get behind.
And it could be this brand that survives and becomes
40, 50 billion
brand. It's going to be one of those brands that you stick with for life, or it fades out and is just, I don't know.
Jordan, listen, it might not be the 40, 50, 60 billion, but do you see it fading out, Jordan? You see Peloton like fading out in the next few years? No way. No way. God, I'm talking smart bike, rowing machine, okay?
Nope, I'm not on the rowing machine. I'd rather them just be a bike company and
no. Let me say
a content and production company.
No, what you're not seeing about rowing. Rowing isn't just rowing like that. Rowing is all kinds of exercises they're going to be doing, like for upper body, that they're going to leverage the rowing machine technology to do upper body exercise, all kinds of stuff for your back, right? That's what you don't get about the rowing machine. The rowing machine is more than just a rower. It gives them flexibility. And could you imagine all the home fitness equipment over the next 5 years that Peloton is going to allow people to create home gyms with instructors for all this stuff? Imagine having for $40 a month, having like literally the greatest, most beautiful instructors in the world
$40 a month plus the most expensive equipment. It's like if you commit to, like, I'm all in on buying every Apple product that ever comes out, and I realize that this is more expensive than a competitive version
Can I just
from
say,
Microsoft.
do you know what people spend, not just on gyms, but on personal trainers? Do you have any idea?
Oh, I know.
Do you know how much did our good, I won't say his name, but how much did our good friend who's been on the show a few times spend on his personal trainer that would come into his home with his Peloton and train them and then mix him like fruit shakes and stuff? Like, he was spending 10 grand for like a few months. It was insane. So here's the thing, guys.
Yeah, they're financing these things too, so it's really not, you don't have to lay out too
Yeah, you don't have to lay out big money. It's nothing. Do you know how much?
How much is it? Like, if you were to buy just the bike and the 40, we know it's $40 for the subscription.
It's $90 a month for everything. $90 it's 90 a month for everything, right?
It all
90
in?
all in. And by the way, Dave, that's not for one person. You and your wife, for $90 on all in, get a machine, and both you get access to all the instructors, not just for biking, but for everything, yoga and fitness and running, everything, dude. And here's the deal. Equinox membership costs $138 for one person a month. For two people, Equinox is $270 a month. Do you know how many members Equinox has? I mean, Equinox alone, it's insane.
The price point kind of makes sense until they start coming up with upgrades, and now, I'm already in the $60 a month bike, and now I want to get an extra $200 a month bike. And
No. You need to do the new calculator that he comes out with tomorrow. Get on that price. You see the value calculator. See the value, Dave. I'm telling you, you got to see through the clouds to this universe that's opening up in front of us with Peloton. It is insane.
I'm not giving into the peer pressure. I'm going to do my own due diligence, and I'm not going to invest just because Chris Camillo told me to.
Yes, but listen, here's the deal. This is a special opportunity. It's not guaranteed. It can fall apart. There's a million things that could happen. Who knows what could happen tomorrow? But Dave, that there are very few special opportunities like this in stocks like that. This has potential.
No, I know.
To be a 5, 6, 7 extra.
The bigger question for me is timing, because I don't think after a 10% run up after hours, buying it at the high, I mean, it could pull back in the morning and then go. It could do all sorts of things.
I have one word for you: Shopify.
Well, here's what I'll do. I'm gonna start selling some puts. I'm gonna sell puts on Peloton, and then I'll get it in at a cheaper price than this 10%. I can probably get it
That's
for
a
yesterday's
no-brainer,
price
right?
today. That's what I'm gonna do.
If you
But I
sell
can't do that
puts, you
after
literally
hours.
can't go wrong. But get a little bit of equity, just so you'll be in it forever with us. Right now, just get.
No, I'm gonna
100
sell
shares.
puts, and hopefully I'm gonna sell puts that are going to put the stock to me at a price that I'm happy with.
Yeah,
That's
but
what I'm gonna do.
you won't get those puts because they'll just expire worthless. You'll get the money, you'll get the premium. You just get 100 shares. Just get a little bit. Get a little bit.
I'm not talking 100 shares. I'm trying to figure out what allocation of my portfolio needs to go in this. Is it 10%? Is it 5%? Is it 30%? Like, I could go 30%.
Do you know what I'm worried about? I'm worried, Dave, that if this thing runs into the mid-50s, even upper 50s tomorrow, that you're going to be like, now I'm definitely not. Look, can you just get in a little bit of equity right now? Just a little bit of equity right now, and then also do your puts on top of that. Okay? So,
Okay,
Jordan, by the way,
that's
can
what
I
I'll
just
do.
put, Jordan, I'm so happy that you're in this with me. It's been a while since me and you have been in one and not Dave. This is great.
Yeah.
Doesn't it feel good?
Yeah.
You like being a part of his peer pressure stock pumping scheme?
No. Do you know the last time I put pressure on Jordan? Because Jordan is like the ultimate AWS guy. He builds some of the most complex platforms in AWS for our former companies, right, that we started. And Jordan, I was like, one day I said, Jordan, remember we're walking back to our office, said, how are you not in Amazon? You know more about AWS than anyone in the world. And he thought, and he came back to me a few days. He's like, "You're right. I got in. I bought Amazon, and that was how much a share?
$350.
$350. Yes, I'm in the same.
I sold like 700 or something like that.
You did sell early at 700.
Now, if I just still had those shares,
you kill me, dude. You kill me. Anyway, I want you to be in this with us because this is going to be a good one, I think. But
even at $41.30, you think this is a good buying time for me?
You know, it's not all or nothing, Dave.
So much money. How many shares should I buy? 1,000 shares?
Yeah, but at least 1,000.
I mean, no, 10,000 shares. It's only $41. So
if you're nervous, do less. You know. Oh, it keeps now. It's running. Now it's start. This is the thing. The longer you wait, just get in right now. Get in something. Don't get more than half of what you want. That way, if it drops, you can get the other half and feel good about it. You know.
All right.
Anyway, guys, if you haven't liked the channel on this episode, would you please do us a favor and give us a thumbs up? This has been. So I would love to see more likes on this one than any of our episodes because it's such a fun one. Give us a like. Give us that thumbs up. Smash it. The YouTube algorithm does nothing for us unless we have tons of likes. So that
You're getting good at this, pumping up stocks and our channel. Hang on, it's not letting me. It's not letting me do 1,000 shares. Hang on.
It's just moving so quick, so hard, man.
Oh, it's 41.86 now. I have to keep raising my.
It's gonna be in the mid-50s soon. You got to get it now.
41. So I'm gonna go 41.80. I'm gonna go.
Just put it in at 41.95. Let it go through.
I'm gonna put it at 41.90. It'll go through.
I want to wait till this goes through. I want to end this call. Listen, my goal was to get David to Peloton during this show. I was hoping it'd be before the show, for the early part of the show, but I'll take the end. I'll take the end.
Order received. After hours. I have to go to order status now. It's very clunky ordering after hours.
And Schwab.
Oh, I bought. Filled at 41.
We got him in.
Filled. I had an order in at 41.90. I get it at 41.69.
Dumb Money is fully in Peloton. The whole Dumb Money trio. We're all in.
Thank you guys so much for watching. If you haven't smashed the button, you should have smashed the button long ago. If you haven't subscribed, you have to subscribe. I have a channel. We have a channel. We have this channel. Subscribe everywhere. We are Dumb Money, and now I have to find the right button to wrap this thing up. Do you have anything else you want to say?
Wait, the podcast. Promote the podcast.
Oh, yeah, we have a podcast. You'll be able to listen to this entire 2-hour and 50-minute show as a podcast. If you missed any of it today, just go download the podcast and just listen during your Peloton ride. You know, you're not commuting anywhere, but go ride a real bike outside somewhere. Go buy a Peloton now that I'm a shareholder. And listen to our podcast during that. We're on all the major platforms. What else?
We did it. We did it.
You got me in. All right.
All right. We'll talk about Elon next. Let's go, guys.
Elon on Friday. Watch us. We're on in the morning. It'll be 11 12 Eastern, 11 Central, 9 Pacific. Right here, same place on YouTube. That's it. We're out. All right. See ya.